Good morning, everybody. Good afternoon, good evening, good night, wherever in the world you are joining us from. It's Wednesday, mid of the week, and we have a busy schedule ahead. Saw some nice earnings, saw some changes in the geopolitical landscape once again because of stuff that is going on there with Donald Trump. So a lot to talk about today, and we will be joined, of course, later also by LJ, who's still having a little bit of issues with his camera. So give him a couple of minutes. Let's see who's already there. We have, of course, Louis, my man, again. How's it going? How are your gold trades, man? You're on fire lately with your gold trades. Insane. Then we have good morning at HB underscore 23 G5Z. What a nice name. We have Speedkring with us. Good morning, man. How are you doing? Hope everything is good. And lots of others already. And before we start, I want to draw your attention to something. There are new account sizes coming to the Fivers. The 25K account will replace the 20K account, and the 50K account will replace the 60 account. So which one are you going to grab there? Lots of nice things coming up. And also have to mention, of course, here again, that very soon there will be futures trading also available on the Fivers. So if you're interested in that, you might want to head also to the homepage and drop your email there so you can get an email notification once that product starts. And yeah, we have had plenty of data yesterday coming in. For example, JP Morgan, which, I mean, they are so poor, aren't they? Their Q4 profit just at 13 billion US dollars. That is crazy. Down from 14 billion last year during the same quarter. So, but this is how the markets are. You can see they closed here much lower than yesterday. So let's see, pre-market, they are up a little bit again. But wow, I mean, what is that? You complain because you disappoint the analyst just because you only earned in a quarter, not a year, a quarter, 30 billion US dollars. And when we talk about trading, we of course have to talk here always about the magnificent things that are going on with gold. A new morning, a new all-time high, guys. This seems like the meteoric rise really cannot be stopped by anything at the moment. Silver also, I mean, it looks like we are going to touch 100 there soon. Either we are going to touch 100 or we are falling down all the way to 68 or 70. But I think as long as gold continues to rise, there's a very good chance also that silver will just head along. No reason. Of course, contrary to this, the oil markets on a rise with the tensions at the moment during the between the USA and Iran. There are already talks, open comments by Trump, for example, about a military intervention in Iran. So let's see how that is going. That is, of course, as traders, always a little bit difficult in a market environment like this, where like one word from one politician somewhere in the world or one sentence can really shape risk on to risk off or vice versa. So we want to be a little bit on the lookout there. Do we have data coming in today? We have data coming in today. PPI retail sales, which I consider alongside the existing home sales as very, very important. So if you're trading today at 2:30 p.m. CET, that is, or at 4 p.m. CET, you want to be a little bit careful, right? Good morning, L Trading Company. I don't know if I pronounce that correctly. And good morning to you also, Sanjartsiyovdov. What do I think about NQ today? Yeah, let's jump maybe right into NASDAQ. It's something I want to have covered the next anyway now. So two ways to look at this. NASDAQ, the tech stocks. So in an environment yesterday where stocks actually went down a little bit, NASDAQ still holding up, driven by the tech stocks. So it's holding up pretty good, in my opinion. Has been, especially if you compare to the S&P, of course, lacking a little bit lately. But I mean, that's not to wonder something about. In general, for NASDAQ, if you're looking at swing trading positions, same like with gold, always a good idea to look at the 8 weeks moving average, the bull market support bands. What works very well on gold at the moment works in any trending asset. So you can see here also, like gold, I always like to show this indicator normally on gold, that whenever we touch the 8 weeks support bands, latest the bull market support bands, the 8 weeks moving average, that is of course latest the bull market support bands, we get kind of a good sense of support. So always a good time to buy them. Nearly 100% hit rate as long as the trend persists. That is, of course. So I'm actually for swing trading positioning, waiting there a bit right now until price comes down into this currently that region here, 25,366 around intraday. Let's have a look at this as well. Which one is that? This one? Yes, that was the one I'm looking for. Yeah, you can also see here my Renko chart with my trading system, which has been not performing greatly at the moment because it's a little bit of a sideways trend we are seeing. I had a long position here very early this morning at around 4:30, which was automatically executed but already stopped out. So my initial stop loss is always one brick underneath the entry. So I was stopped out here at 25,740, entered at 25,780. Not too bad that whole one, once this runs, as you can see, for example, here, this usually produces a good amount of really decent trades and a good R, overall R that is. But yeah, it's choppy at the moment. I would not really commit very much to one side, to be honest, at the moment, especially in this early trading session. I have kind of a feeling that the markets are, with the exception maybe of gold, for example, really waiting for the United States, for New York to come in and give kind of a sense of direction where we will go on later. So let's see later. What do we have here? What's your take on euro dollar 4 hour time frame? Let's have a look at 4 hours on euro dollar as well. Well, 4 hours is, I mean, if you, with a lot of fantasy, I'm not so much into these classic chart formations, I have to tell you. Victor would probably scold me for that now, but you could maybe interpret this as kind of a head shoulders formation. As I said, I don't use these normally, but I know a lot of you guys out there use them. So what I'm seeing here at the moment is a clear sideways trend, at least on the 4 hour chart. We have the longer term structure somewhere like this. So there's a lot of leeway in between. Not much to see there. Let's add the, what is that indicator LJ is always calling? The deviation bands. Wait, I took a note of it last time, didn't I? I have to ask LJ later when he joins us here, because that could for sure help us here. So by the look of it, you could of course say that this was kind of like a micro bull structure, series of higher highs and higher lows, which then reached its top here. And since then, we have been in kind of a micro structure to the downside, so a falling trend structure in this case. I don't see really the bullish breakout there, I must say honestly, if I just concentrate on what happened last year. So this whole thing, this very much looks still like a, not going to say micro bearish structure because this has been forming since end of December already, but on the 4 hour, there's nothing that springs into my point of view right now where I say, okay, this is like a bull market we are seeing there. Maybe you can share with us the things I do not see at the moment at this chart. Then we can, I will have a look at this. My experience, what was the easiest trading year of your career? My God, none. To be very frank, very honest with you, I think trading is a very hard profession. It's, of course, a very rewarding profession if you're successful with what you're doing. But if like I have a series of days, for example, or maybe even weeks where things like really, run for me, where I have a feeling that, or like every day I'm in profit, and it kind of feels like, I've cracked the markets, and I finally the days where I have losing streaks are over. Whenever I'm there, for sure, there's going to come a time again where I have a losing streak and where I will feel like, the worst trader in the world, and that's very so it's not easy. In a hindsight, of course, you can always say something like, I remember both Jonatan and I a couple of years ago, that was 2000 and must have been 2020 or 2021, after the collapse of FTX, the crypto exchange. Some of you might remember that still we on live stream said this is the time now to buy Bitcoin, and I did. I bought Bitcoin between $16,500 and $30,000. So in hindsight, that was of course a very good investment. I sold most of it last year, around $93,000. But was it easy? Is it easy to hold on to an investment like this until you have like 5, 6, 7, 8x with it? It's not. It's demanding on a different level because you're always tempted to sell. And I think you can make your life more easy if you approach the markets in a way that I, for example, did here right now, where I first of all analyze, no matter what time frame I'm on, like what is the current market structure. And in euro dollar, for me, the current market structure is a bearish one. So we are seeing a US dollar becoming stronger. So my personal choice here would at the moment always be that I would look for entries in favor of dollar strength. So for short entries in euro dollar, which is once I find the tool later, I'm going to show you that again, or we let LJ show that again. But in very simple ways, you could do really simple things like draw a trend line here, and whenever we touch the trend line there, that's a good way to sell, for example. But be aware at the moment that, especially the currency markets, they are very, very political. So there's a high chance that one word from one politician, and I'm, of course, especially looking into the direction of Donald Trump, there can change everything again. So you want to be careful. We can go a little bit further down, but I think this is even clearer than the 4-hour chart, in my opinion. The 1 hour is very clear. At the moment, very clear. This is the tool I was looking for. A trending market, a downtrending market, to be more precise. So why should I make life more difficult for myself to look for bullish structures in a market like this? And I can only assume, and I mean, you mentioned 4 hours before. That's why we started there. Maybe you can share with us. What did you do that already? No. So if you're still watching, maybe you share your reasoning with us so we can know what makes you think that we have a bullish market structure on the 4-hour chart. Well, it doesn't bring good luck, to wish you happy birthday in advance already. So best would be if you come back tomorrow, and then we can congratulate you. Bitcoin to 100K. Well, nothing is impossible. We are not that far away from that. So let's see if it goes to 100K first or down to 60K first. Hi Dirk, do you have any option trading program? What do you mean, like a program that I use for option trading? So I personally use Saxo Bank for option trading, and because I think if you're more on the retail side, it's pretty good. I don't trade stock options. I trade FX options. So there's not that much around. Usually, you have to use whatever investment banks, for example, offer you. There's a lot still going on via telephone or via chat because it's an OTC market. I have a program right now running which analyzes options and then forecasts in what direction currencies will develop until option expiry. There's an account also on the Fivers attached to this one. And once I get a little bit of track record on this, so a month or two, I will also share that with you guys, of course, or at least share how that one is developing. Other than that, options, if you're new to trading or newish to trading, don't start with options, guys. It's like really, really complicated. And if you don't really understand what you're doing there, especially on short term, like something like weekly options, especially when you want to be the writer of options, so the person selling them to get the premium, you can bankrupt yourself very, very fast. So option trading, in my opinion, is more about knowing how to handle risk, even more than spot trading, in my opinion. So even more than the trading we do here at the Fivers. What's your ideas? Yeah, no, I said it earlier. NASDAQ, in my opinion, but I want to look at it actually at the lower time frames as well. For me, it looks a bit neutral at the moment. Yeah, if you look here at the hourly, for example, or let's maybe start even with a 4 hours. It's a bit like a wedge, and it's this typical situation, in my opinion, where we have something like this forming. We see that often in consolidation periods of markets that trend fast, so that you have like price compressing slowly, and then sooner or later you'll get like a violent breakout either to the north or to the south. Of course, since if we zoom out and look at this whole structure, the assumption is fair that we are going to see a breakout to the north rather than to the south. But when this will happen, I don't really know. I mean, with the exception maybe of a NASDAQ, we had a pretty good start into 2025. I want to go quickly down to the hourly here as well. Yeah, it's pretty much neutral. So what we are seeing here, oh no, that's the wrong one. The way, if I would trade this manually, which I don't do, my NASDAQ trading is all automated and based on other stuff and basic trend lines. But just to get a quick grasp of what we are seeing, it's a sideways range. We are somewhere bound between, let's say, 26,200. You can put this maybe even to the all-time high. So 26,300. Let's put it like this, and then somewhere this range down here. So between this and this, it's a pretty broad range, to be honest. But this is a sideways range at the moment. So like following strategies at the moment on a daily level also I wouldn't necessarily do. Would maybe look more for contrarian stuff, like when you see a sideways markets like this, potentially even something like an RSI could work here well, because this is what an RSI is looking for, the trend, the ranging markets, because then the signals, overbought over 70, oversold under 30 could trigger very well. Don't do that. You're going to fail with a trading strategy like this, but it's a ranging market. So if you want to approach the market, at least on the hourly or higher time frames, you could do so with oscillators. So we could, for example, let's add an RSI for the fun of it. Let's see what this one has to say. That's also very neutral. So, but you see what I mean. In ranging markets, an RSI can be not your only choice, of course, of your only weapon to choose tradings, but it tends to be quite good actually at identifying tops and bottoms. If we look at the last signals here, this one, for example, under 30, that was pretty much the bottom. However, this really only works in ranging markets. But yeah, I mean, fair enough. This could be at least instrument of confluence, like one of the things that adds to whether you can make a good trading decision or not. Just give me a second. Yeah, LJ seems to have really problems with his cameras, so he's trying to work things out there at the moment, the poor guy. Another indicator that you could use in arranging markets like this is a slow stochastic also. So, and it's pretty much the same like the RSI. You see it's down when the RSI is down because the methods, how these bands draw are pretty much the same. Yeah, but stuff like this works in a ranging market not very well, but it could add to your decision making. So if you see, for example, market dropping down to the 8 weeks moving average and you have an oversold RSI, that could be an indication that, yeah, maybe, this is a good area right now where I should buy the NASDAQ. We can, of course, go a little bit further down, but even here on 15 minutes, it's not really a trending market. A bit more uptrending, but the local structure at the moment, even on 15 minutes, is pretty much solid between here and up here, right? So the earliest you want to wait probably today, if you're kind of trying to trade this in a contrarian way. Contrarian way means, trying to pick the lows and the highs. You might want to wait until we're somewhere down in the area at 25,670 to 25,7. That could be a good range there, or a good point to then go long the NASDAQ and short. I wouldn't go short NASDAQ at the moment until 25,800 to 26,000, to be honest, or 25,800 to 25,900. So anything below 15 minutes, I'm not going to analyze, guys. That doesn't make any sense in my opinion. Let me quickly head back to the chat and see if we have any other questions. I have too many windows open here, guys. Here we go. Oh, you were talking about an options training program. I don't know of any. I have done this for such a long time. I learned it back then when I was still working for banks and for family offices as a trader. So I didn't have a formal training program when it comes to that. You kind of pick it up along the way. But I'm sure there's a lot of material out there. Just don't fall for any influencers, trying to sell you some option strategies or stuff like this. Yeah, that's a fantastic question. How do you go about swap? I love swing trading, but swaps scare me as they could pile up when the trade takes on. You're absolutely right about this. So you want to check first of all, of course, for your direction, is like the swap in your favor, or is it something that gets deducted for you every day, especially on Wednesdays, because you pay 3 times the swap. You pay for the week and the swap there also. And if you trade something like gold, for example, the swap is very high. So I wouldn't plan on holding my trades there for more than a week, to be honest. Same applies for almost all currencies out there. You want to be especially careful if you trade something where one of the pairs is like a high interest rate region. So, for example, if you trade something like US dollar versus Turkish lira, if you're on the wrong side there, so if you go long, that means you buy US dollar, you sell Turkish lira, you pay an insane swap there every night. So you want to be very, very careful there. So when I trade, usually on brokerage accounts, same as the fivers, I tend to also not hold my positions very, very long. If I really, as I said, usually I do option trading anyway, where it doesn't matter, especially since I'm the one who's selling the options Normally, I have a time horizon of 1 to 3 months for that, 3 months more commonly, depending on the volatility. And you can also do something like outright. So outrights are like spot trades, but you already select a fixed settlement date. So the swap is already incorporated there. That's not possible. So I would maybe keep your swing trades on any brokerage platform or your Fiverr accounts at something like 3 to 5 days. If that is still swing trading, of course, can be discussed then. But yeah, be careful that we've seen that over and over again. You don't want to end up with, oh, I earned 200 pips on this position, but I paid 150 pips in swaps. That's not good, but definitely something you need to take into account. Fiverr's merch. Moin, Dirk. Yeah, moin too. A fellow Northern German probably here. Yeah, I'm originally also from Northern Germany. I would love to wear a Fiverr shirt or drink my coffee in a Fiverr mug. I would love it too. And I told them already, how about we get some nice merch? So yeah, I'll pass on your message, and then let's see, maybe we get something. What do I see? Gold, of course. A lot of you guys are asking about, so let's have a look at gold. Yeah, basically, gold is unstoppable at the moment, and it has been for a while. In this geopolitical environment at the moment, where we still have Russia-Ukraine war going on, where we have Donald Trump annexing Venezuela, where we have Donald Trump openly discussing about forcefully annexing Greenland from Denmark, about leaving the NATO, and all this beautiful stuff. That, of course, is a little bit of a risk-off environment, although the stock markets are not acting as risk-off at the moment. But it seems like that gold is kind of the only secure space out there. So yeah, it seems like nothing can stop gold. As I said, for the NASDAQ, my strategy really is here whenever the 8 weeks moving average is touched, whenever the bull market support bands are touched, that I open swing trading positions, which I don't hold on for super long time due to the swaps we are talking about. But yeah, and it always seems like that during the Asian session, we see metals being bought, and then later we kind of fade the trade again, right? But yeah, it's unstoppable. On an intraday thingy, I would be very careful. Sorry, I was a bit distracted. There was somebody in the background, but I didn't see who that was. So intraday, I really would refrain from trying to determine where is the next high now until we have a couple of days where we go down again. I think that's extremely dangerous. It will happen, of course. Again, we will have something like this before, and then we will have a lot of longs that are liquidated. We will have something like this. It can really come out of nowhere, but I think you stand a better chance with long positioning at the moment still than with short positioning. Would I now open a swing trade to the upside? I probably wouldn't. As I said, I want to wait for the pullbacks. Can be that the next pullback then is actually at the level we are right now because we are going up further, but I want to see things more aligned there than just having a gut feeling. Let's go quickly down here a little bit for time frames, but let me delete my crude drawings before that. Otherwise, my charts are going to look all messed up. So let's go to the 4 hour. Same picture, right? What a beautiful uptrend. Even without the moving averages. If I remove this now, and show you this chart, and I put a pistol on your chest and ask you have to choose a direction now, which one is it going to be? You're probably going to say, just by looking at the chart, long. So don't try to catch the rising rocket and be on the other side. I saw some analysts from bank at the moment who were also already calling first quarter for 5,000. I don't know who it was, with a target of $6,000 for the first for Q2 actually 2026, and it's so fast. No, I mean I can remember still when we crossed 4,000 and were streaming there that we were amazed. Now we had 4,630 already. So 4 hour also Prefer long positions, wait a little bit for the pullback. And if your analysis is as simple as drawing something like a regression channel, maybe here from the last low to here, then wait either until we are here in the middle again or until we are at the very low point here, and then it's time to rebuy again. Things might be different, of course, like trading on the very low time frames, like looking at minute charts or 5-minute charts. Hourly, pretty much the same, right? There's no reason for gold to not go further up. Does that mean it's going to be a straight line? Well, for sure not. Always can very well be that we, see something like this first until we shoot up again. As I said later, I have to ask LJ again what the exact name of this indicator he's always using to kind of show you standard diff bands. No? Does anybody remember what the name of that indicator is? LJ was using it last Monday. And I didn't take note, but I found it very beautiful for drawing and for getting potential entry areas. Let's go all the way down to the 15 minutes. And it's pretty much also the same picture. If, like with a lot of fantasy now, you could, of course, say, well, at the moment we have like a sideways structure up here, but it's also not really a sideways structure. I mean, let's be honest here. It's still an uptrend. So just because we try to overcome this area of 4,630, 4,640, 1, 2, 3, 4 times, 5 times now, doesn't mean that we are going to be deflected again. So I wouldn't bet my money on that we are going down first again to those to this area here around 4,565, 4,600, maybe something like this. If you want to do that, you want to keep your stop, of course, very tight. So if you choose to do that, you should think about when is this structure breaking. It would be breaking if we see a jump over this yellow line. So probably you have your stop somewhere here, target maybe somewhere here. Still a risk reward ratio of 1 to 6. That's pretty solid. I see LJ in the background with a dark camera. Yeah. So 80 minutes now, and he will join us again. Very nice. While you are in the background, what was the name again of a standard deviation indicator you were using? I think he cannot hear me right now. Anyway, he's soon going to be there. Yeah, that's that about gold. And it's especially, when you see actually something like this, you see, well, we have an uptrend on the daily, we have an uptrend on the 4-hour, we have an uptrend on the 1-hour, we have an actual uptrend on the 50 minutes with a small consolidation now. For me, that's an indication that I, again, would be very careful with playing against the trend, meaning shorting, for example, gold here. So I would prefer actually a breakout if I want to play this on the 50 minutes. I would prefer to see a breakout. So over this. And then see something like this happening, a pullback. That would be a solid trade for me, honestly speaking, for a long one. When I say solid trade, you can hear this is normally not the way I personally trade, simply due to the fact that I don't trade gold in a manual way, just in an automated way. Let me scroll through here. A lot of questions today. Whoa, very specific. Scott is asking, good morning, Dirk. What are your thoughts on using 34, 55, 89, 144, 233, and 377? What is the time frames? So you're like minutes or seconds or hours or whatever. That sounds oddly specific. Is that like somewhere from a Fibonacci sequence that you have this number? I don't have, with this exact odd numbers, I do not have any experience. One thing I like to do is, you can see this on these charts here. For example, the one on the top right here for NASDAQ. This is a 3-minute chart. on the bottom right, this is a 10-minute chart. So I like to use them sometimes due to the simple fact that not everybody's looking at them. And in my opinion, finding an edge very often encompasses also that you need to use things or try to use things not everybody is using out there. This is, for example, why tools like the RSI, slow stochastics, MACD trading strategies usually do not work anymore because everybody's using them, so they get arbitraged away by algos, for example. And one way out of this can be to incorporate also other time frames. Whether that these are these specific time frames you are mentioning, where Scott, or other time frames, that's something you have to find out for yourself. It's especially if you trade manually, in my opinion, kind of you have to find the time frame that kind of suits your time budget and your eye. Not everybody wants to look at 5-second charts the whole day. It's very draining. After an hour or two, you're probably going to be drained already. Yes, yesterday's CPI data was more important due to the simple fact that this is something the markets are aiming at, because CPI data always gives us an indication also on what the Fed will do decision-wise. So are they going to cut interest rates further? Are they going to hike interest rates? Or is the interest rate environment going to stay the same? And we saw yesterday that the inflation year over year pretty much stayed the same as forecasted, 2.7%. We saw core inflation, which is the one usually the Fed looks more at year over year, at 2.6%, so slightly lower than the forecasted 2.7%, which could then, if we believe people out there, give an indication that more interest rate cuts are in this year. However, the Fed is going to meet in 14 days from now, on the 28th of January. And it's pretty much set in stone at the moment that the interest rates are going to change. The interest rates are not going to change. That the interest rate environment is going to stay the same, which is, of course, also in line with what we've heard very often from Jerome Powell. That we are not getting as many cuts probably in 26 as we want. I think last time I mentioned we only want to do one cut. But times are changing. We have a new chairman coming in the Fed. So Jerome Powell's mandate is going to end in May. And then we'll have somebody probably joining, or probably, not probably, for sure, being the chairman of the Fed who's more pro-Trump. And the question, of course, is like kind of the independence of the Fed eroding. So this is something we need to keep in the back of our heads for 2026, that maybe the Fed is going to become another instrument of the Trump administration and not be very independent anymore. Mick is asking, there are swap-free accounts. Yes, some brokers offer swap-free accounts, but usually they get their fees from something else. So I'm not an expert on this, so don't take everything I say here with a grain of salt. But if I'm not mistaken, if you are a Muslim trader, for example, you are, I think, not allowed to trade on accounts that have swaps, so anything interest rate based. And I think some brokers call the swap something else, or have like daily fees or something like this. And just because they are called swap free doesn't necessarily mean that they get cheaper, or you can hold on to positions without incurring any costs. I've got 4 manual ARB dual futures and a martingale. You are trading martingale. Martingale is like, for me, kind of fascinating. I kind of, it's a strategy that stems from roulette, right? And for anybody who doesn't know what martingale means, it's like on roulette, you have, if you just go by the colors, 3 things that can happen. You can have a red number, you can have a black number, or you can have the green zero. American roulette, I think, has even a double zero in green. So what you do with martingale is you bet, like for example, $1 on the color red. If the color red comes, then you get your $1 plus another dollar back. So you won $1. And you continue always betting on red with the logic behind it that it cannot be that statistically, the color black coming 10 times in a row is only, I don't know, 1% or 5% or something like this. So the theory goes, but it's not real. That is not how statistic works, because the chance is always 50% or slightly below 50% actually, because there's the green zero also, which gives the house at stake, the casino at stake. And you can do so in trading as well. And some do so where they say, oh, if I have a losing position for my next trade, I'm just going to double my position size to make up for my losing trade and to win again. The problem is you eventually, if you are like wrong 5 or 6 times in a row, you end up with having to bet an insane amount of money. So $1 after one time turns into 2. After 2 times 4, after 3 times 8, 16, then you're already at $32. And from there, it gets a bit insane. And this is always just to get your money back plus $1 in actual profit. So eventually you end up, if you're wrong a lot of times, or just something like 10 or 11 times in a row, which will happen. This happens with any trading system. You end up that you have to bet something like 100,000 just earn $1. I'm exaggerating now a little bit, but you can see from a risk-reward perspective, it doesn't make any sense. I kind of get the attractiveness of it, of course, because it means that with one trade, you can always recover all of your losses. And I have very long ago, I experimented also with this, but I came to the conclusion that long term, it's always going to end up with you losing your account. So be extremely careful with something like this. Yeah, thank you. Standard deviation. That was the indicator I was looking for. So let me look later if I can find it there. And as soon as LJ is able to fix his camera, we can ask him also again on how to actually use it. Yeah, guys. Please leave us a like, subscribe to the channel. We are almost at 95,000 subscribers now. Our goal, of course, is to hit 100,000 subscribers in Q1 in 2026. We're not far away from this. And I heard it through the grapevine already that once we reach 100,000 subscribers, there's going to be a mega giveaway. So help us reaching 100K by liking this video, by commenting, by subscribing, and then you might have a good chance of winning an awesome prize once we reach 100K in subscribers. Yes, so FIB numbers. Yeah, why not, Scott? Try it out, and if it works for you, that's great. Of course. Shorting gold. Yeah, silver just pulling everything up. Silver's insane. Yeah. I'm not touching it. I'm actually thinking about buying for small money. I'm talking maybe something like $1,000 or $2,000. A short leveraged silver ETF. So where by the leverage of 3 or 5, you earn money when silver falls. But it's always the thing, and I had this opinion already also when we were at 70. Now we're at 90 something. So timing wise, to catch the absolute high or the absolute low, it's very, very, very dangerous. What are you saying, Tom Hardy? Not the real Tom Hardy, right? Lately, many future platforms, be it Future, Prof, and CFD, have giveaways since you've started. Stream, you probably don't come live and yeah, we do giveaways, of course, regularly, but we need to have a reason for that. That's why I said once we reach 100,000 subscribers, of course, that is going to be the reason for us to do a giveaway again. And like I said, it's probably going to be a mega giveaway. I'm not the one deciding this, but like I said, I don't want to go too much into details now and spoil the beans. I heard some of the nice stuff that is planned for that. How many years are you in trading? I have been in trading for 26 years. Now, that doesn't mean that I'm like a day trader always. the majority of my trading activities long term or in options trading, which usually is between 1 and 3 months. Long-term investments, which are like my absolute specialty, are 3 to 5 years. Trading on lower time frames like this is actually rather new to me as well. I have tried it, of course, in the past, but I'm kind of, facing the same challenges that many of you are doing. I'm trying to automate all of my lower time frame trading, simply to the fact that that I know myself that sometimes I can get very emotional on the lower time frames. So it's for me also a lot of learnings. But of course, you can translate like things that you do on longer time frames, not always, but sometimes also very good to lower time frames. So the indicator, for example, you see here for the NASDAQ, this is like a trading strategy that is actually traded on the NASDAQ. And whenever you see long or short, this is where the trading logic then flipped. It's not running on trading views, running on MT5, but for visualization purposes, I have it on trading view as well. For matching buy and sells with the market percentage movement rhythm. Yeah, if you like, you can, of course, explain a little bit further what you are talking about there. What's the best platform to trade options from South Africa? If you're a retail trader, you want to trade FX options, for me, there's no way around Saxo Bank, honestly speaking. For options on, for example, indices and so on, so if you want to trade US options, there are plenty of platforms out there. Even something, I think the most popular one probably was Robinhood back then, but I don't want to advertise any of those platforms. We are, of course, here to prop trade, but really be careful when you start options trading. If you don't know what you're doing, if you don't know the basics, if you don't understand the Greek, so what is gamma, what is delta, what is vega, and so on and so forth, you can end up really destroying your account very quickly. We've seen that over and over again. You just need to go on Reddit and look at Wall Street bets, and you have your fair share of stories of people who lost everything and more sometimes if they ever want selling the options by trading options, because especially if you're the seller of an option, you get a premium for that, like you are like the insurance company, and then it goes the wrong way and you're not hedged. Then it can be that you got, I don't know, $5,000 for the options and later need to buy it back for $50,000. There are more than enough stories of people who did this and who lost really everything and more. I've been trading for 8 months, lots of wins and losses, but at the end, and maybe I'm only up 10%, my beginning balance, I don't know what to call it, definitely success. Definitely success. 10% in 8 months, that is really, really good. Why am I saying that is good? I know most people who start trading dream of something like, I'm going to start with $500 and in 4 weeks I'm going to be millionaire, because this is what all the influencers out there are telling you. But it's not true. The reality is that if you look at the top performers over the last, let's say, 30 years, which usually are hedge funds, the top hedge funds out there, they are around 14% on average per year. Yeah, there are years, of course, with outliers to the upside, where they maybe even make something like 100 or 200%, but there are also years where they don't earn any money or where they even lose money. So it always averages out to about 14%. So earning 14% in a good risk-adjusted way, what I mean by this, I'm going to tell you in a while, is already puts you into the bracket of like the top 1% of professionals out there. Yeah, if you are above 14%, you're already beating hedge funds. Of course, you should not compare yourself to a hedge fund because they will not put everything in one strategy. Obviously, most of them, at least, there are also exceptions from that. So if you earn 10% in 8 months, there is no reason for you to be sad about it, in my opinion. That you are definitely on the right way. if you earn them in a good way, if you earn 10%, but at one point you had a drawdown of 70% or 80% or even 50%, things are different then, of course. So you need to measure your success also. How much did I earn in relation to how my lowest point was? If you earned 10% and your drawdown was at 3% only, that's fantastic. That's fantastic. If you earn 10% and your drawdown was at 40% at one point, that's of course not so good. But don't beat yourself up. After 8 months of trading and being up 10%, I don't think that is something to be said about it. Maybe your expectations were a little bit different, and this is the thing I don't like about the trading industry, because it's always like, oh, trading is so easy, you just need to follow strategy A, B, or C, and then you can auto earn money, easy $250 a day, and you name it, what they are promising you there. So be extremely careful when it comes to that. Don't listen to all the influencers out there. There's a reason why we don't give specific trading advice. There's a reason why we don't in depth share our trading strategies with you, because just because it works for us doesn't mean it works for you. I always have a good example of it. Good friend of mine is a fantastic oil trader, really fantastic, earns a lot of money with it. He's just trading oil, WTI oil. And he tried to teach me his trading strategy, and I cannot trade it. I lose money when I try to exactly copy his trading strategy. Why is that? Because his perception of risk, for example, is different from mine. So you need to find something that works for you. Doesn't mean, of course, that you cannot get inspired, for example, by our live streams here. There's no best way to learn, man. The best way to learn is, sit down, get the fundamentals correct, so you understand what you're doing, that you understand how currencies work, for example, that you understand how a price is discovered, how an order book works, and then you try to find something that makes you money, and then you backtest it. And the more time you spend with learning and the more time you spend with backtesting and developing your strategies, the higher the chance, of course, is that you're going to be successful with this. Treat it like learning a language. I think that's always a good example. When you learn a language, you're also not going to be fluent within 1 week, right? It's probably going to take like heavy studying for at least 3 to 5 years. I mean, you can see in my case, I lived a long time overseas in the USA. I lived a long time in Singapore, where I only communicated in English. But of course, still my English is not as good as my native language, my native tongue, which is German, if you couldn't have told already by my accent. So it takes time and dedication. Do not give up. It's a bumpy road, but it's a very rewarding road as well. Don't have the expectation of starting trading now and then 1 week later being successful already. Is $10 too small to raise money or capital in the market? That's the good thing about trading. And that's the good thing about, for example, having a prop trading account. Like $10. Did we have an offer? Like, I think I remember New Year we had like an offer for the 2.5K prop trading accounts for something like $12 or something. So next time you see an offer like this, you should make use of it. Why? Because if you're successful then with your account, you're automatically going to scale up. You're automatically going to get into the position where you can present a track record to a trader. And honestly speaking, if you would come to me and show me something like, hey, look at this, Dirk, I've been trading the past 3 years with a small amount of money, and even if it's just a demo account, and I have very good risk-adjusted return, and it's just a matter of time until somebody is going to give you some money. But you need to build up this track record. So it's like building your CV. Nobody's going to give you probably a high-paid job when they don't see like, oh wow, this guy who wants to be an engineer has actually studied engineering, knows something about engineering. And it's the same with money management too. You have to prove. It's not like something like, trust me, bro. It's the first thing I get, especially on LinkedIn. A lot of people really write me every week who are proposing things to me like, hey, come and invest into my trading strategy or into my financial product. And my first reply always is, do you have a track record? And then 90% of them don't answer anymore because they don't have a track record, or it's, a scam from the beginning. The other 10 then send me some kind of track record, which usually is like a screenshot from a MetaTrader or something like this. And then my next question always is, yeah, well, that's great, but that can be faked. Do you have, like, for example, from an official prop trading account, a track record? Do you have something that's audited, for example? No, when you build up a track record like this, why not go to a notary and get like a stamp on there, somebody confirming, yes, this is reality. Then you should be easy. It should be easy to raise money. So it's not about, nowadays, luckily, that you need a lot of money to start. It's more about not the money, but the time. You need to be dedicated to this like 2 to 3 years until you have a good track record, and then things will fall into place automatically. Yes and no. So reading books is always a good idea, not only for learning things, but I enjoy reading myself very, very much. But yes, I learned something about candlestick patterns. I mean, just because you, for example, read a book about candlestick patterns doesn't mean you're going to become successful with candlestick patterns, but it can inspire you and give you ideas. A while ago, I actually shared a trading strategy here on the Fivers. I think it must have been mid-December or something last year, where I said this used to be very long ago my go-to trading strategy, and I still come back to this trading strategy because I get an idea how to develop it further. So the more books you read, or the more educational content you consume, the higher your chance also that you'll eventually find your own strategy. That should always be the ultimate goal, not to copy somebody, but to find your own strategy. Because if you copy somebody, there's always the danger. What happens if that person doesn't continue to trade? Well, then you're back to square one, right? Yeah, that was Christmas. Thank you. $12 for 2.5K. And I think it's worth investing. I mean, if you're totally new, please use a demo account first. Use a demo account for a couple of weeks. And once you feel more confident, then buy an evaluation account. That's really nowadays, in my opinion, with a good prop trading company. And of course, Fivers is, in my opinion, the best one out there, at least when it comes to Forex trading and soon futures trading, hopefully, as well. We have somebody who passed the first challenge. Nice, man. Congratulations. Is it a one challenge program, or is it 2 or 3 evaluation phases that you need to go through? If it's just one, like on the, what are they called? Are they high stakes? I'm not so sure. The moment when you are funded already. If not, you're on the second stage. Nice. First one is a good feeling, isn't it? Right? When you pass that, you kind of feel and think like, yeah, this is actually working, what I'm doing here. But the best place I can learn to get a good trading strategy for myself, I think I don't have one. You need to develop itself. Any trading strategy out there that's for sale is not going to be a successful one. Why should a person ever that has a good working strategy ever sell that one or give that one away for free? That immediately would erode the edge of a trading strategy. So you have to do it the hard way, I'm afraid, and learn. If you really want to, thank you for the question first. I think this is a very good question. If like I wouldn't really at the moment recommend any specific books about certain trading strategies or candlestick patterns or something like this. But for me, like a series or book series that inspired me a lot through my career was always from Jack D. Schwager, Wizards of the Markets, I think it's called. We can Google that quickly. Jack Schwager, the Market Wizard series. So, das wird open. Open it here on Amazon, for example. Market Wizards. It's a series of books, so 6 books now in total. I think I've read 4 of those books, which is basically the author of a book, Jack D. Schwager. He's interviewing traders who are very, very successful. And for me, like why I enjoyed this read so much is because he covers a lot of different trading strategies. So you have forex traders there, you have commodity traders there, you have like traders with a very mathematical quant approach there. So, and this, I took a lot of inspiration. I still take a lot of inspiration out of this book series because I return to reading it every once in a while to kind of get an idea that, you know, how many different ways there are to solve this giant riddle that the financial markets are. So start with that, and I would be surprised if you don't get an inspiration of what to read next when after you're done with this one. With maybe not all 6 of them, maybe start with the first one. But in my opinion, they are timeless, timeless evergreen. Sorry, LJ just texted me. Has really, really problems, the poor gentleman today. Any suggestion to clear both the phases in high stakes? How to make consistency in profits? Yeah, that's the challenge always. No, by the end of the day, so my go-to way nowadays is, and this is why I started by the way, also 2 new automated strategies on currencies in the beginning of January to kind of share later on, once you know they've built up some track record, to share kind of my approach to this with you guys. That's like the most challenging thing, to have to be consistent as a trader. And in my opinion, being consistent as a trader, it's not so much about the strategy you are choosing. It's quite easy to find something that works, you know, like 50% of the time or 55% of the time, or even only something like 40% of the time. Everybody can do that. The problem is the risk management behind that. If you if you have like a risk management, for example, of, you know, earning $100 by risking $500, then if you don't have an insanely high success rate of like over 90%, then eventually you will lose the account. So it's more about accepting that you need to be very picky about the trades you pick. Do not like trade 50 times a day or something like this, and that you're on a statistical level, that your trades have a good chance of making long-term profit. And you will only be able to do that probably if you trade with a risk-reward ratio of minimum 1.5 R, so that you earn $150 for every $100 you reach, because then you have the luxury of having a success rate under 50%. And most traders we are seeing, the ones that pass the evaluation phase, then struggle to actually get payouts because they deviate in their risk management from what they did during the evaluation phase. So, and the problem is, of course, to really have statistics on, has my trading strategy a chance of being successful? You need to backtest it. And the more trades you have there to evaluate, the better. So when I backtest strategies, I usually have a look that they have like a minimum of 300 to 400 trades in the past. And that is just for the backtest. That is not even for the walk forward validation, for Monte Carlo simulations, and all the beautiful things you can do that. But yeah, it's a pain in the butt, you know, but this is what we have to go through as traders. Oh, I actually quite like the high stakes. I think because they give you a little bit more leeway when it comes to risk. And once you get a hang of it, once you have a strategy that works, there are not going to say fast to pass, but they can be passed in a reasonable time without breaking your bank, of course. That is also, I see, of course, the attractiveness of buying a bootcamp account for $250,000, but this will blow a larger hole into your pocket initially than, for example, a 2.5 or 10K high stakes account, for example. Yeah, we're doing a lot of talks about practical tips really today, not looking so much at the charts, which is, to be fair, it's not so much going on this morning, in my opinion. We have unbiased traders here giving tips. The monk who sold his Ferrari and Atomic Habits. In trading, you need to be humble, and these books will help you to be humble in trading and life in general. Especially with the latter, I don't know those both of those books, I have to say, but the part about being humble as a trader, I couldn't agree more with you on this. If you have a big ego and you like to be the person who always is right, you have a need, your ego has a need for being proven right, then you probably are not going to be a good trader. I don't know if anybody of you has played golf before or other sports as well. I used to be quite an active golf player, not so much nowadays anymore since I have kids. But whenever I was very emotional about playing golf, about making that next swing, about hitting the ball, the opposite usually happen. And this is in trading as well. If you cannot bear a losing trade or a streak of losing trade and it really attacks your ego, then you are not going to make it as a trader. You need to be humble and you need to be thankful also if your trading succeeds, because it's not always going to be like this. Like losing months, even losing years are part of this. Yeah, good question also. Yeah, you should get a mentor as a beginner. Yeah, but a mentor doesn't teach you a strategy. A mentor or coach, at least if they're a good mentor or coach, is just going to make sure that you, in developing your skill set and your strategy, are on the right way. Again, a mentor, a coach, is not going to share their strategies with you, but they are going to share the skill set it needs to develop a strategy with you. So, for example, like pointing you in the right direction. If you struggle with your analysis, maybe you do something you want to analyze or develop a strategy based on price action, for example, and you cannot get forward with it. It's really pointing nowhere, low success rates or negative R or whatever. Then they could give you advice. Hey, have you looked at your strategy maybe from this angle? Or maybe you should add indicator X or do something completely different. This is usually what a coach and mentor does. Otherwise, it doesn't make any sense. Again, why should anybody sell you a profitable strategy? We have Patrick. After 4 years, I've passed challenge and got funded last October. Congratulations. Received one payout and then lost the account. Been struggling since then to pass again. So first of all, there's a lot incorporated into what Patrick is saying here. And it's very typical. And I would lie if I would tell you now, like, I've never been in that situation. I can tell you horrible stories about days where I lost 30,000 and more dollars just because I was an idiot. So first of all, Patrick, 4 years, you've been in this game for 4 years. You've shown a lot of discipline already, more than most. Most would have given up completely by now, probably. So congratulations on this. And you received one payout. But what your experience is somewhat typical, to be honest, as well, because it's a whole different game suddenly. When you're not trading on, an evaluation account or demo account where not much can happen if you make a mistake and lose the account. But if you do that on a funded account, when I lose this account, when I make mistakes, I'm not going to earn money with this anymore. And this influences your decision making, actually. And we've seen that in my time. I was working for FX brokers, for example. I've seen that over and over again, that people are very successful on demo accounts. And once they want to apply this to live trading, they suddenly struggle with it, or they lose their accounts because they are not trading the same strategy that was successful before that anymore. They try to, crank all these nooks and crannies out there and adjust, micro adjust things, which ultimately then erodes the edge. Keep with it, try again, and believe me, it's totally normal, Patrick, to go through a phase like this. It's sadly really what happens to more than 90% of the traders out there, and I've been in that exact same spot numerous times, again and again and again. And yeah, it's hard. It's hard, but sadly, it's part of what makes you grow as a trader by the end of the day. Well, thank you very, very much, and that these are very kind words of you. And guys, if you feel the same way, really please leave us a like, subscribe to our channel on our mission to reach 100,000 subscribers. I know I'm not so much in the charts today and talking about my actual trades, but talking about things like this, psychology, how to deal with setbacks as a trader, that is equally important. I always say 60% of your success is risk management. Then you have 20%, which is up here in your head. For some traders like myself, it's even more probably, because I'm a very impatient person, when it comes to trading. Thus, my solution for this is to automate things so I can take myself out of the equation. And only the remaining 20% are the strategy itself, while most beginner traders actually think it's all about the actual strategy, when in reality, it just plays, not going to say a minor role, of course, but an equal role amongst all the things that can make you fail or succeed as a trader. Yeah, that's absolutely. I agree with you. Chess, and I know professional poker players, for example, that used to be very earn a lot of money in online poker, and nowadays they are not doing that anymore so much because you're basically just playing against bots. At least that's what they told me, and they make often very good traders as well. Why? Because they are used to having to make rational decisions. Yeah, they don't put so much emotions in it. Like poker, for example, it's all about what is the probability of me winning with the cards I have on my hand right now, when I factor everything in. And it should be in trading as well, like this as well. So when they have like a series of 3, 5, or 10 losing trades, they don't take that personally. They don't put like their ego so much in it, because they know in a series of 1,000 trades, this is eventually bound to happen, that you have a series of losers. While beginner traders focus more on stuff like, I want to be 90% correct of the time, and then they negate something like risk management, or they get overly emotional, for example. Not yet, but very, very soon, my dear friends. So again, I want to show you this. So if you go to the Fivers homepage at the moment, you see here futures. You can, if you want to trade Forex, you see the 3 accounts: 1-step program hypergrowth, 2-step program high stakes, or 3-step program bootcamp. And here's the section futures. Soon, when you click on it, you can leave your email address here, and then you'll be notified about a possible early bird access. So you want to do that. I cannot promise yet, of course, when it's going to be done. But from what I've heard, it's not very far in the distance anymore. So it's definitely coming. About this one, I'm not so sure if you can trade like the same strategy on different accounts. You might want to contact support there. There's an online chat version of the support also on the homepage, and ask there. Bear with me while I'm. Thank you also for your kind words, Ryan Insights. Yeah, it's really it's a bit weird. No? It's from my experience often like this. Yeah, as soon as you want to translate what you did on a demo account to reality, somehow it doesn't work anymore. I think you also have to look at like the details, not so much at the Fivers, because the way you trade doesn't change whether you have a demo account or not. Like swaps, spreads, and transaction fees are all the same. But I know like some brokers have demo accounts, for example, where you don't pay swaps, which is like totally unrealistic, of course. And then you try to live trade, and maybe because you're scalping the markets, you suddenly see, well, spreads and fees and swaps play like a huge role in my trading. LJ, good to see you, man.
Finally.
Finally. Did you manage to repair everything?
Oh, headache, yeah. That took ages. I had to go through the actual like system folders, delete everything,
Oh,
download
really?
the package from I don't know.
Oh my God, that
but it's working
sucks
now.
very much.
So.
Yeah, but especially then, good to see you, mate, and welcome to our stream. We were not only the beginning of the stream looking a lot at charts, not terribly much going on at the moment, in my opinion.
No,
I think people are waiting for the numbers later, starting at 2:30 my time at least, and so we are talking about like psychology. A lot of good questions today from our community. And like one question also, two things I wanted from you. I, of course, forgot again, I wanted to demonstrate this nice standard deviation indicator earlier that you showed us on Monday. So maybe you can give me the name of that again. I didn't want to spend so much time, looking around. Yeah, exactly.
Looking around for it, yeah.
Standard channel, it is probably, no?
Yeah.
Okay. So that one, and maybe LJ can give a little bit of instructional advice on that again, because for myself, I was very fascinated by it, and I thought like, well, if I would be a beginner again and somebody would show me like this, would have made my life so much easier, instead of drawing everything by myself. And then, if you allow me, what was the second thing I wanted to ask you? I forgot. Oh yeah, now I remember. So we had somebody here on the stream asking or sharing his journey as a trader. Said, "Oh well, it took me like 4 years to pass evaluation on accounts and finally become funded. Then I had one payout and then I crashed the account. And obviously, that leaves you depressed. And I said, I've been there multiple times. I exactly know how you're feeling. Have you experienced that? Do you have like a way how to deal with things like this when that happens?
Yeah, I mean, particularly, friends or other people that sort of want to get into trading, they start asking for help. Help teaching them, that kind of thing. Some people pick it up right away. It might just the right timing in the market. The regime was good and they got some wins. Others take a bit longer. So some just sort of find their pattern, find their little route.
But by the way, I don't consider 4 years a very long time, honestly speaking.
Yeah, I was about to say, a lot of people ends up being 4 or 5 years, 6 years even, before you actually sort of get proper traction, right? You might have waves of success to begin with, then it comes crashing down, and then it's back and forth, and it takes that refinement process over time. So yeah, definitely very normal. Don't be down in the dumps about that. I'd say just keep plodding away with whatever you're doing. Try and really nail down failure points, right? What is the piece that's actually holding it back? Because you probably are seeing some kind of success within there, and obviously, especially you have managed to pass an account, and try and nail down those bits, because people normally are having some success, which is why you sort of stick at it for 4 to 5 years. It's not completely zero, but then stuff falls apart. It's going to depend on your approach, your time frame. You're trading intraday, swing, all that kind of stuff. So you might find that one of those approaches you've been doing for a very long time, you actually do better scalping. Some people just much better scalping, others much better trading with a longer duration, and then it comes to scalping and it all falls apart, right?
Yeah, exactly. This is what I mentioned also earlier. I said, like, when I began my trading journey, I always thought of myself, I want to be a scalper, which probably I share with many other people out there as well, because it's attractive. There's a lot of action. So I thought a lot of clickety click, up and down, and you basically can feel like the Wolf of Wall Street or whoever. And I was drawn to action. But then I noticed I'm a terrible scalper. I'm like not patient enough, actually, which is ironic to be a scalper.
Yeah.
I'm very good in long-term trading, or I'm very long-term trading. So everything from above 1 month up to 5 years. This is where I excel. And just recently, lately, came back again to try myself on lower timeframes again. And then again, I rediscovered, you make bad decisions when you try to scalp. So what's the solution? You need to automate things to take yourself out of the equation. And it's like you described, it's a journey. You take positives from failures because they teach you what not to do. It would be different, of course, if you come back after a failure 2 or 3 times and you try the same thing, the same pattern again and again and again. I think it was Einstein who said that's the definition of insanity. If you try the same thing over and over again and expect a different result. But that's part of growing, And it's the same pattern anywhere in learning. You learn by making mistakes. When you learn a new language, you will make a lot of mistakes in the beginning. I've been speaking English for ages already, and I still make a lot of mistakes speaking English, but I still try to learn from them, of course, as well. And it's in trading like this as well. I think the difference really is that the problem is in trading, people, brokers advertise trading in a way that, first of all, it's easy, which it is not, and will never get like an easy profession. And second of all, they sell the dream of, you just need to put in $500 and then later on you can very quickly become a millionaire.
Yeah, exactly. It's like any other professional skill or anything else that you went into. There's always that learning curve. It takes the amount of time, the amount of reps. Much like, if you went and did a degree at university or something, it's a couple of years. You don't just sort of turn up for 6 months and then, all right, I'm off again.
I want to be an engineer now.
It takes time to build everything together in that coherent, succinct manner, and as the word describes, become a professional, become proficient at the profession. So I would say just keep plodding on. Definitely break down what you have been doing, and try and compare. Sort of find the times that stuff is working, then times it's not working, and lay those things out in front of you and try and find that differential, that pinch point. The other important thing, though, don't jump off certain things too quickly, because some people trade a strategy or approach or something and it's not immediately working, and then they toss in the bin and then they're doing something else and then doing this and doing that, and then you're not really going to get that learning portion if you're not also allowing that time for it to kind of mature and then tease out those issues.
Yeah, that's why I earlier said also, like in order to determine is a strategy really successful, does it have a chance to earn money in the market, you need like at least something like 300 to 500 data points, because like this you can not if you're trading something like tick charts or something, of course, then it's much more. But if at a reasonable time frame, you're trading something like at least 50 minutes. And if you have this data of like 300 to 500 trades, then you can ensure that you probably have your trading strategy went through a lot of volatility regimes. So ranging markets, trending markets, flat markets, and so on and so forth. And you can analyze how does it behave. Does it only work during certain regimes out there, or does it generalize very well? That is an important step, and it will teach you also, just because the last 5 trades didn't succeed and you ended up making a loss, in the grand scheme of things, it doesn't mean anything. It's to be expected. And this is like something that personally always gives me a lot of confidence. That I see like, oh, today was a shitty day. Like one of my new automated strategies last Friday, NFP day, was a very bad day. Lost, very bad is like lost like 0.1%. But statistically, if I look at all the trades from the back test, from the walk forward tests, verification tests, and so on and so forth, there was a very, very low chance that this was happen. but it was one of the first days of a trading strategy where this happened. If I didn't have a backup data, if I didn't know how to see this day in the grand scheme of everything with a strategy, I probably also would have been tempted to just toss it in the bin. Or it doesn't work, And this, you're absolutely right. We see that a lot, especially with traders that are just beginning their journey.
Yeah, indeed. You got to have it in that context window, So, yeah, and you're going to get that by testing it again and again and again, figuring out what is leading to its success and what potential flaws there may be.
Yeah.
And then, yeah, this was the standard.
Sorry, would you excuse me for a couple of minutes?
Yeah, sure.
I'll be back in 5 minutes.
That's all good. So, guys, this was the standard div channel that I think you guys were talking to Dirk about before. So on Monday, I believe it was Monday, we were covering this, talking about gold and essentially how you can use the edges of the standard div channel to find sort of where you might look to exit the market or enter the market. So just like we've had this move up here on gold, we broke through some of the highs. What we were talking about earlier in the week was you probably want to then wait for price to consolidate sideways a bit, get towards that lower band, and then look for some kind of structure on a lower time frame that would give you a decent entry point for assuming you're still bullish on the market, right? Assuming you expect that momentum to continue, line that up with, you look at this trading range through here, came down into the support through there, over by that that second negative bolly, and then we've run back up and back into the middle sort of fair price as it would be considered. So let me jump in chat as well. How we doing, Louis? Good to see you. Infinity, going well. Louis saying took a oil long from 60. Oil. Nice. I assume, I know, are we talking West Texas or Brent? I assume it'd be West Texas from 94. But dude, if you've just caught this this past pump just now, very nice. But this is also another example of the standard div channel here again, right? So we've got those tops, consolidate down, find some of those support levels here. You're now at the -2 standard div, and you get the rise right back up, right? And so those shift around with the volatility, expand, contract, etc. Hence, I always use 120 as the length of the look back window. That seems to be very good, happy sort of sweet spot between capturing the current volatility as well as taking in enough prior candle data. So, how are we doing, Scott? Good to see you, mate. Techno saying, today at what time will we get tariff news? Whenever Trump decides to go mash his phone screen on Twitter, I guess. Yeah, I mean, it's very rarely that we've had some of these like established releases. But I guess one of the best ways some of this stuff often comes through, one, be present of when Trump wakes up. That else when they have some of the White House briefings, because normally they might announce something beforehand and then have the briefing so that they can answer questions or give more context behind what they're doing. What resources would you recommend to learn fundamental analysis? I've been trying to implement it into my trading, but when I'm reading financial news / reports, it feels like it's written in Mandarin. Yes, this is one of the difficult things with macro and fundamentals. Probably a good place to start. So we'll go right from 101, right? Base level, assume someone is coming into it and they know nothing, right? That point would be to look to understand how an economy works, what the purpose of interest rates, the Fed, bond markets, how they interact with capital, debt, tax, spending, company earnings, etc. So a good resource for that is you can find it on YouTube. Ray Dalio. I think it's just called it's literally just how the economy works or something, I think. It's a great video. I think they released it over 10 years ago or something now, but very good sort of 101 place to start. Now, from there, it's kind of about pulling apart each of the fundamental components. So another good way to start is look at what news headlines there are and say it's like CPI, PMI, whatever else it might be, and literally just go off and Google as to why these things are important, how they impact an economy. And then once you learn each of those bits, you'll start to see how they kind of all interact into each other. And that's how I measure things. Welcome back, Dirk.
Thank you.
We just had a question on sort of where to start with learning sort of fundamental and macro stuff. Which, we've had these questions.
It's like you're standing in front of the Mount Everest at first. It feels kind of like it, and you don't know how to climb it. It's in my opinion, at least this is the way it was for me, a bit a pain in the butt approach. But I go about or went about when reading those articles like Patrick described, like reading Mandarin really, and whenever I encountered something I didn't understand, I try to Google it and understand it. That takes a lot of time in the beginning. So if you have like 3 pages of macro analysis, you can spend like hours and hours and hours until you feel confident that you understand it. But it gets easier every time, and it's quite fast. Eventually you'll see, this is not the Mount Everest I'm standing in front, just a shallow hill. And the good thing is, once you have this understanding, you kind of start making your own connections also. That you see things maybe that the typical analyst, economist out there doesn't look at, because he has a very, very, very scholastic approach. Maybe I can describe it like this. Whereas especially you, Patrick, because you had already a funded account, you approach it more from a trading perspective. But once you're there, it really adds, also if you trade on lower time frame, it adds value because you understand the context. You understand why is the price behaving at the moment like it is, what is influencing it, for example, Trump. Yeah, why is gold rising in an environment that seems to be more risk on? And it helps you to decipher one more puzzle piece of these million puzzle pieces that are the financial markets.
Yeah, and I think that's exactly it. There's no like one-stop shop, go here, do that, and then you'll know everything. It's very much one of those things where you have to keep adding those building blocks incrementally, understanding that. And the more you add, it's like the whole puzzle piece gets filled in until you've actually got a picture of things. And it's kind of this web you'll develop in your head where, like Dirk was saying as well, it gets easier because now you've got all this past information. You can remember and recall what happened prior, where we were then, where we've come to now, where we should be going, and it becomes this building framework like that. But yeah, it's there's so much out there to go through, but as you start connecting those pieces, it becomes like almost like a neural network where they all link together and it all makes sense. But an individual piece by itself it's kind of obscure, and you're like, what do I do with that now? And so yeah, hard answer is start somewhere and keep going.
I can relate so well to this because it's such a pain in the butt process in the beginning. With like when you get into techno analysis, it's more hands-on. It's because you have like interactive charts. It's not just reading, thinking, where you can play around. But then when it comes to techno analysis, people in the beginning tend to take things too easy, in my opinion. Instead of when they think they found a strategy, really back testing this for a couple of hundred trades and going through the effort, even if it's a manual effort, method if you don't work with coding stuff. But so, yeah, there's also a pain in the butt thing when it comes to technical analysis. It just comes later. It's easier in the beginning on you.
Yeah, exactly. Good to see you as well, Fabian. Happy New Year to yourself.
Happy
Also,
New Year.
And indeed, hopefully a prosperous one.
For all of us.
Yes, that's what we want. Empress, so the inputs for the standard deviation channel, I've got it 120 for the length period, and then it's basically one standard div. So you've got the middle line, and then it's 1 and then 2, right? So hence you put these numbers here. So 1, 2, and then for the negative ones, -1, -2. So yeah, simple as that. There you go.
Sorry, I'm a bit distracted right now.
That's all right. Scott was saying, I think there's news from the court also on the legality of the tariff stuff, but most people are saying it will go through, or USA is going to have to pay it back. Yeah,
that is going to happen.
It's not happening. Yeah, they're not going to pay it back. But yeah, I don't think they're going to end up blocking the tariffs. Yeah, it'll just be another one of those, back and forth, whatever things. It's probably not going to happen. There were a number of companies starting to write up lawsuits from their partners to potentially try and get money back from the government. But yeah, I don't think the tariffs are going to go away. Certainly not anytime soon. If somehow they got through there. Love your work, LJ, but I do miss Mike and his humor on these streams. I'm sure you do too. Yes, very much. We all miss Mike. It'd be lovely to have him back someday. We'll see.
Yeah, absolutely. He cannot hide forever.
Yeah, he can't hide forever. They were saying the standard div channel works well with the 920 EMA crossover as well. Yeah, definitely. So, like we were talking on Monday, you can use that and then combine it with like some second or third order indicators or some kind of input, whether you just want to use market, structure or something like that, or some of these moving averages, and basically that's how you combine it. So the standard deviation channel give you sort of expected market range, and then you find the entry points are confirmed with something else. Created a Fiverr's account, passed the first step, but the account was hacked in the second step. Please give me some advice on how to work on it so I can pass it well.
How does it?
What do you mean it was hacked? Do you mean your details to the hub got leaked somewhere somehow, and someone's tried to take it over? I'm a bit confused with the second part as far as advice on how to work so that you can pass it well if something's been hacked.
Also, like your MT5 details were hacked and somebody started trading wildly.
Yeah. I mean, if that's the case, if you have been hacked and your account's been compromised, definitely let's know immediately. And they can either change it, close the account, I'm not sure what they do in the event of that, to be honest. But yeah, I'd say hit up support if you've actually had something hacked.
Definitely.
Morning, Miss K. How are we doing? How are we going? Yeah, there we go. Okay, so yeah, I would contact support immediately, to be honest. The other, I'm sure you already talked about this though, but silver. I was just gonna say, dude, this thing is.
I'm not kidding you. Of course, yeah, we touched based on that. Touch based in the beginning of the stream. I said back then, I'm so tempted to put like $1,000 or $2,000 in one of those crazy 3x, 5x leverage short ETFs
Yeah,
on silver. I researched one already this morning, very early to put my money in, but it's like I don't know. It's like as long as gold is going up, I think silver is going to continue this way.
yeah, and I think gold will go a lot further, especially after the Friday thing.
Yeah.
There was a lot more. I saw some reports and stuff of central banks in general coming even more so to the conclusion that they need to shuffle more of their portfolio into gold as a lot of these things are happening. So, yeah, gold seems on a unstoppable train. I think we'll get to 5K pretty soon. End of Q1. I wouldn't be surprised if we're at 5.5. I think these.
Absolutely, yeah, absolutely.
Yeah, I thought we might slow down a bit here, but we're accelerating. Probably in part that, and Venezuela, of course. So
I think the only thing that can stop gold at the moment is if we, on a geopolitical level, see something like, Putin saying, "Hey, sorry, Ukrainians, we're going to withdraw. The war is over." Trump not talking about annexing Greenland anymore. China saying to Taiwan, "We're going to leave you alone," and Venezuela, not being annexed by the USA as well. But let's be realistic, this is not going to happen.
And we got the Iran, situation.
Yeah, Iran. Again, there's so many hotspots in the world. Really, at the moment, I cannot even keep track of those. Which Donald Trump said also. No, he made like a statement, like that, somehow hinting already into the direction that the USA is going to intervene in Iran as well by saying like, hold on, we are coming to help you. I don't remember exactly his words there, but sounded like warmongering once again.
Yeah, I don't like
person who, by hits in his own opinion, deserves the Nobel Peace Prize, and is the current holder of a FIFA Peace Prize, Peace Medal. Sorry.
Yeah, dude, I don't know. The whole thing's wild. I feel like the Iran one could be something potentially more serious in terms of risks. I don't know. We'll see where it goes. This is all.
I
see where we get there. To be honest,
I don't want projections anymore about what's
yeah.
going to happen for us. We're just 2 weeks into 2026, man.
Yeah, there's too many moving parts right now to try and scope that out. But this was that area in general that we highlighted when we were talking about it last, that I wouldn't be shorting remotely anywhere until we get firmly into that, which we are now right in the middle there. I mean, do we punch past 100 now? Like,
we at least have to touch it once. No, I mean, that's, I think, inevitable. What happens after this? Okay, if we drop first down to 80 or 60 again, just to go to 120, that remains to be seen. But I really would have a hard time believing that we're not at least once seeing something like 100 or 99.99 or something like this.
Yeah. Like, I don't even like trading it, even just to continue going long here. It's so stretching the tooth. If you're on like very short time frame, or 15-minute, and you're just trading it technically from like level to level, then not so bad. But I would definitely not be holding anything if I'm not directly in front of the computer watching silver right now.
The thing is also, in my opinion, that if you trade something like this, for example, on your Fiverr's evaluation account, and maybe you pass evaluation either because you got lucky or you were able to read this volatility, doesn't really matter. What are the chances But this market structure that made you pass your evaluation is still going to be there in 3 or 6 months down the road. Because if it isn't, your whole strategy became obsolete with this. So I really, if if you want to do that for fun on your own account, okay, why not? But I would never trade it on my own evaluation accounts or even on my funded accounts, just because it's a momentary volatility thing, and once it's gone, you're probably not going to have a chance again to be successful with something like this.
Yeah, that's a very good point. It's not a sustainable trading method or approach. It's one of those one-off type things, or like you manage to capture the bottom of the market when you get a stock crash or something.
Yeah, exactly.
Yeah, day to day. So, yeah, I don't know. We'll see what goes on with silver. I'd be much more happy continuing to buy gold. I think there's a much better case for it there. Silver massively, like it's just gone bonkers. Doesn't have the same
the commodity
sort of
meme coin.
yeah. Anyway, remember asking, are there any instant funds? So there is, if we're talking about for the fivers, you do have the hypergrowth accounts, which you still have to go through the first sort of 10%, I suppose, but then you can withdraw, but you are taking 50% of that. So in that way, it's instant funding. Infinity asking, how are current geopolitical conflicts influencing central bank decisions, especially around inflation, oil prices, and safe haven demand like gold? I mean, as far as their central bank decisions, they're just keeping an eye on inflation prints. Right now, inflation, all the nowcasting that you can sort of put out there and going forward over the next quarter, even into the second quarter, so right up to where Jerome Powell will be gone, is very benign, right? Inflation is going to stay quite low, potentially a bit of further weakening in the job market. So this idea that there's, I believe the market's currently pricing in basically no rate cuts until Jerome Powell leaves. I think there's that at least the market pricing will probably start to come back the other way a bit. And so that'll have that influence on the dollar in particular. And then maybe it's all data permitting that they may still cut, because all that nowcasting that you can do indicates it should be pretty chill, kind of like last year. Everyone's looking for slightly higher inflation, not coming through. So safe haven demand like gold, central banks should just be buying more of it. I think all of these risks, especially when they want to look to sort of level out some of the currency risk for various currencies. So they just like to sort of play around with the total asset holding. And gold definitely, it seems grants in the whole world, not just central banking. Everyone's like, yep, gold is the way. So will fivers be integrated with TradingView in the future so we can trade directly on there? I have no idea about that.
I hope not, honestly speaking. I really hope not. I mean, we all use TradingView, but when it comes to the actual trading part and not the viewing part, MT5 is far superior, in my opinion. I've tried working with TradingView by connecting it to brokers or under, for example. I think it's not good. It's really not good, the way they integrate it. So I would prefer not to. But if you don't like, no, you like TradingView, otherwise you wouldn't be asking for this. But CTrader is also offered, no? To my knowledge, I don't have experience with CTrader though.
Yeah, CTrader is also offered. CTrader is really good, and it is a cloud platform. So, if you go overseas, or you're just at a friend's house or a neighbor's house or family, or you want to take your laptop somewhere, you can bring it up, and it'll be all your charts, all your bits and pieces will be right there for you because it's all stored on the cloud. So I believe there are some ways that you can get some sort of like third-party stuff to trade from TradingView, which then will go to like MT5 or something. I'm not too sure about that, but I believe there is something like that. So
Yeah, you can use a bridge now to do that. I do that for the
yeah.
alert parts, like those are translated into signals for the MT5.
Yeah, there you go. So there might be, I have no idea about the fives doing it, but I believe there are third-party solutions out there for you. So
Yo,
Richard!
how we doing?
good on you guys.
Not too bad, not too bad.
Sorry, my mic, not mic, my speakers were so loud. The moment you said Richard, I was like, oh, mine ears. So
I've been known for blasting eardrums.
that is good, especially with that low down bass tone that you also like so
You
much.
should, yeah, exactly. Yeah. You should hear me when I lose a trade.
Is that why you don't have neighbors anymore?
Exactly, yeah. That's why nobody wants to rent the office space next to me.
Smart move, you know.
Yeah, scare them all off.
Just for Dirk.
My God, I see in the background, William has been moving to other cells, I think, in Shawshank.
Yeah, Will finally gets dark light or like black light above him, so now they can see whether or not Will has been eating all of his vegetables properly.
How you doing, mate?
How's it going, guys? What's good?
Oh, very much. We are enjoying the quiet market today. We've been answering a lot of questions from the audience today. A lot of good questions today, and been talking about psychology, about what really differentiates to up your chances of becoming successful by not pulling both of your legs away from underneath you. My God, that was so complicated expressed by me. Amazing.
Yeah, it's pretty slow right now. I mean, euro dollar's sort of just moving around 5 pips here and there over like 2-3 hours at the minute. So
yeah, it's all been a bit at the moment.
It's just it's
also,
just
guys,
sort of
what do we think of the ambiance?
Yeah, nice. Paid off that you went to the market this morning, huh?
Yeah, I know, didn't it? Although I did, so I'm going to go shopping for exactly what you guys have sent me in chat earlier on. So I'm going to have a look tomorrow. There was a couple of things there, but they just weren't quite what I wanted for portability. So what's that? Oh, I see. Oh, it's hot. Got a nice hot coffee.
Coffee. But if you're in Hong Kong, you should drink milk tea, man. That's nice.
Oh, mate, it's incredible.
It's incredible, isn't it? I love that stuff.
Isn't it? It's absolutely incredible. I had one this morning. I had one with breakfast.
Oh man, I missed that.
Yeah,
too much.
Soon you're going to be
addicted.
What is milk tea?
I literally said, I said to my partner, I was like, "Do you reckon we can take this home?" And she was like, "No, it's only like made. It's very much Hong Kong." I thought, that's annoying. I was like, I want to bring it home.
In Britain for it, like get like a distributor's license and just like import.
I made it, bro. Honestly, God, that's a great idea. This tea is life changing. Like as a Brit, as someone who loves their tea and scones. Oh my God, man.
It's especially the Hong Kong one. It's different when you're in Singapore or China. It's like in Singapore, it's more like tea siu dai, but the Hong Kong milk tea is like Hong Kong nai cha is like the goat, really.
Yeah, mate, it is incredible. It is incredible. So, my partner just saying that. I don't know if you heard that.
Yeah.
My partner just said, "I like him."
Thank you. I like you too, without ever seen you.
CC, he likes you too. Oh man, that was very good.
Are you guys? I mean, let's get back to trading. You guys in any trades this morning, or have you been as passive? Richard is nice. That's one more trade than I did already.
I was in a trade, and it's now no longer. It is now no longer.
It is now no longer.
It is now no longer.
Now no longer.
Yeah. Let me just share my screen. Maybe that'll make sense. I took a NASDAQ short.
Ooh, good one. Nice.
Yeah.
I was wondering if that might have been the trade. So yeah, I brought up NASDAQ before.
I got caught on the wrong side this morning.
I need to just make sure of the exact entry point. 64.32. So that was the trade that I took. The whole morning so far, we've this is on the 5-minute chart. This whole morning so far, we've really been struggling around this point, which is the Tokyo high. It was established early in the morning with rollover with market open. We had very slowed momentum around about the tippy top of it. We had a secondary reaction, and since then we kind of like just started dwindling ever so slightly lower. I had this lower point of New York and London of yesterday, which was in contention for me at that point in time early in the morning. We were drifting around this area, but not really showing any sort of bias, really. And then we had effectively the low of the day, which just got swept after an attempt to sweep that most recent high point. So if this was the most recent, I misclicked. If this was the most recent high and this was the most recent low, we had just swept it with no follow through, pushing price up higher. So I just thought, okay, if this is going to break in one of the two directions, I doubt there's going to be a retest for me to wait for. So I'm going to just trade the breakout. Candle close just below the low of the Tokyo session and the low of the day so far. And I initially thought I could potentially aim for what was Monday's a swing point on Monday, but I decided no, don't be greedy. Go for a 1-to-1. Just very quick, incredibly quick, in and out. Done.
Nice one.
Nice, easy right there. I'll have to say bye to you guys now. I gotta go and do a couple other things, and also try and hopefully figure out what was wrong with the camera and make sure it doesn't happen again tomorrow. So, all right, I will see you guys tomorrow. Ciao for now. Enjoy.
Yeah, I'm going to do that.
Yeah, see you later, LJ.
I'm going to do that as well. So yeah, see you guys next week again, latest. Bye.
Awesome stuff.
Dirk, have a good day, mate.
Great one, my man. Dirk, I'll send you a picture of my milk tea tomorrow morning.
Oh, do that, please. I'm going to get so jealous. I'm going to show it to my wife, and she will hate you for it. Take care, guys. Bye.
Bye, Dirk. Oh, mate, like you're also jealous. I really want to try that now.
Mate, honestly, get yourself to Hong Kong, man. It's incredible. Also, bro, Wi-Fi. It seems okay.
Yeah. Like, I initially thought that you were going to be, like, all jittery and janky and...
Oh, mate, so did I. You know, I was dreading coming on as well. I've been so excited to start work again after moving here. I was like, oh, yes, you know, I got to go back to work, see the boys, have a chat with everyone, you know, like, join in with chat and do some trading. And then just Wi-Fi was like, nah, not today. Not today. Nah. Probably not tomorrow either. Who knows when?
I don't want to participate in this idea that you have. Oh, you want to work? Nope.
Yeah. Literally, man. But I mean, we seem okay right now. I haven't opened up my terminal. So maybe I've closed my terminal to see if that's going to do anything. But we'll see. We'll see. Hopefully. I mean, what do you think? Like, what do you think of the ambience? I may need to get another ring light, maybe to put like down here, because I feel like it's a lot of. I mean, like maybe if I'm like here, but that's way too close. No one wants to see me that close.
So
not even the missus wants to see me that close.
I'm so used to you having the blue background, like the blue lights in your office back home. Well, at your previous home, to see the purple or like the lavender hue.
It is blue.
It looks lavender.
I don't know why it looks so purpley right now. It is blue.
Oh no, it's not like mine. Like, I think mine is shiny.
Yeah, no, it's the same blue that I got at home. I don't know why it looks so lavendery here.
But okay, so
Weird,
I wanted to say, okay, the lavender does suit you. Like the feel, the atmosphere is pretty cool. Now, I don't know if you know this, but if you look at the Fivers logo, the new one, it's got that like duality. It's like kind of like changing over from one color to another color. Not the one on your shirt, but like the one on
yeah. Okay, I'm with you.
So it's got like that.
The new web.
Like lavender-esque purple color transition over. Kind of looks like that. Unless I'm colorblind, in which case, what a way to find out.
Yeah, can you imagine? Newsflash, you're colorblind, my man. Yeah. Oh man, what's good though? How's things? I was gonna say, how was your day? But it's 11:36 for you right now. That's why I keep. Yeah, I keep my laptop in UK time, so I know what time it is, like that side of the water. But how was the start of your day? How's your morning been?
Well, you saw me this morning. We were together. So
true.
Yeah,
that is very true. I did see you this morning.
Well, what a way to start a conversation. I saw you this morning, but for those who don't know, how's your day going? I'm well, mate.
Yeah,
it was a good day. It's been a good day so far. I've had a nice little trade as well. To be dead honest with you, I thought that this trade was going to kind of like be stuck for a while. I honestly thought that we were going to just play around a little.
When you take one I saw earlier.
Yes. So didn't think it was going to be that quick. I mean, it wasn't. It wasn't 7 minutes. I think a 7-minute trade. So very, very, very quick.
That's not the one that we discussed about on the 1 minute, was it?
No. Actually, when we were talking about the potential of taking a trade this morning, we were discussing, what would it be that I would be looking for, and then when I went down to the 1 minute, I was like, you know what, it's very lax, it's very sideways, it's struggling. We need to really get some sort of break, and I was definitely sure that if we were going to break, that it was going to be a volumetric strong break, pushing either up or down. It wasn't going to be a break, retest, continuation. It was just going to be break, there we go. And it was purely because of just this attempt to take it at the high, this very, very sidewaysy action over here, long term. And I think I can't remember when I mentioned it, but if you take a look at the way that NAS moves coming out of Tokyo, normally into like the beginning sections of London, there's usually this little bit of a sideways action, maybe a little bit of a trend down in one direction and then a slight pullback, consolidation. But when it breaks strongly, usually, with very little retest. When you go into New York, obviously, okay, this was news, so let's just
I know.
Let's just call a spade. This movement here was news, and it was followed up by a second.
You can see that as well.
Yeah, that's a very volumetric candle, and there was a secondary attempt which just failed. And this, to me, is just very much a clear sign of maybe we're not that happy to go bullishly. We had this downtrend. I had a sell last night, which I spoke to you about earlier. I took a sell on this movement, and then it moved so quickly. In that's what we were discussing on the 1 minute, when we went down to the 1 minute for the entry on here. You'll see the candle in question, which now I'm struggling to find.
Yeah. To right, try to.
Oh, there it is.
I just had it there as well. I just saw. There
This
you go.
one.
Yeah, yeah.
There we go. There's the candle that I took the trade on, and you can see on that 5-minute candle that it had a very small body and then a massive wick towards the bottom. And I was trying to explain to Will exactly how that trade turned out. I took the trade in. It was initially a 1-to-1. My entry point was on that candle, and then we had this sudden, absolute like scare candle. It just dropped. So
it's on the 1 minute. Like, what was the actual size of that candle?
So the actual size.
Just a wick of the wick. What was the actual like pip wick size?
The full size of this candle was 62. So 620 pips, $62.
Yeah.
All right, but the wick of this candle alone was 43. So 2/3 of this whole candle.
I was going to say it, bro. It's over half the size.
Was this
candle,
very quick
of the whole candle move.
Yeah, and that's just 1 minute. So it was just like, wow, that's crazy.
No trader wants to see that, especially if they're in a trade. Like,
the worst thing is, it hit my take profit exactly, but because there's spreads, the spread wasn't deep enough to trigger the take profit. And what it then started doing was to start moving slowly upwards. And I decided, oh, you know what? Is this going to be that sudden volatility in the market before we start skyrocketing up? So I decided, you know what? Just cut the trade.
Roughly around as well, isn't it? It's the fact that you hadn't broken those previous lows before continuing down.
It's the crazy
it's the fact
thing
that.
Sorry, I just want to remove some of the drawings because I confuse myself with that because Henry is also saying careful with my drawings.
But yeah, it's the fact that if you go on to that 1 minute, we hadn't even broken the pre-low. We hadn't broken that structure to the downside. So it's not as if you could say, well, you know, on the 1 minute, even though it's 1 minute, it is still trying to break to the downside. It is still creating micro structure order flow to the downside, but it wasn't. It wicked the low, and you're like, even the 1 minute is rejecting this right now.
Yeah. So the basis for the idea, it was on the 5 minute. Like I didn't even have a look at the 1 minute whatsoever. The basis of the idea was we have the high of the day. We've had one touch on it already, or one attempt, let's rather say, and this first attempt led to us creating the low of the day. So in my mind, if we were to come back to this point, we would probably see some sort of push lower yet again. So I didn't even wait for a low to be broken. All I wanted to see was just this slowed momentum, and then
the third attempt.
Yeah,
like the 3 strikes and you're out. So like,
and then 1, 2, 3 bearish candles, which is and you remember my definition of a base is reaction off of an established area. We have an established area.
Mm-hmm.
It's reacting off of it. We have slowed momentum, and then a change in direction, followed up by a base candle, followed up by a continuation candle. So all I needed to do was just enter on this trade per my rules, bar the idea that it needed to break a recent swing point. That's the only portion of it that wasn't aligned. And it's one of the reasons why I did not take this trade down here. There was an entry point at some point here on the 15, if I can remember correctly. There was an entry point here, but the only reason why I didn't enter it was because of the fact that it was the first touch on it, and it still looked like a strong attempt to push price higher on the 15 minute with this candle. But overall, not bad. Sorry, mate, I kind of like took over there for a second. How has your day been?
Bro, my day's been good, man. It's been productive. So again, put in the Discord earlier some more action figures of shocking delight, shall we call it? I showed Cece this time though. Like I was like, babe, look at these things, and she was like, yeah, people go mad for these things. And I was like, well, look, like for those of you who don't know what I'm on about, I'm not an anime guy. You know, I'm not an anime guy. I'm not into. The only thing that I love about Japan is their food and their country aesthetically. You know, I know nothing else about it. I love the Japanese food. You know, sushi, absolutely adore it. You know, the Japan as a country is a beautiful country. And karate, because I'm a karateka. But other than that, I know nothing else about Japan. So, like, when I went to this, where wasn't? Yeah, Mongkok, I think it was. So we went to Mongkok, and I had my whole eyes widened to what anime is in this one shop, and I was horrified of how intricate the details are on these figurines, especially the female ones. And I was that horrified. We went again to Mongkok today to do some shopping. So I was looking for a second monitor for my laptop. Couldn't find one that I liked. There's a couple of like big monitors, but I want something that I can put into my rucksack with my laptop, and I can bring it out at any time. So I'm going to go into a different city either tomorrow or Friday and have a look. So anyway, went into Mongkok. I said, like, babe, we got to go into this shop. And she's like, oh, yeah, no, I know the shop. This is the one you went to yesterday that you said, wasn't it? Forgetting, of course, she's a local. She already knows what this shop is.
She knows.
And I was like, yeah, look, we gotta go to this shop. So I took her to this shop, and I was like, look at these things. Like, what is going on? And they were like, yeah. I was like, kids can't see these. Like, you cannot sell these to kids. And she was like, babe, these aren't for kids. These are like collectible figurines. I was like,
yeah.
Oh, fair. I was like, oh, right, okay, I didn't know that. So, like I said, a whole new side of like culture and anime I just got exposed to today, and can see why you guys like it. That's all I'm going to say.
Well, I wouldn't go so far as to go and buy myself a bunch of action figures or figurines or whatnot, and not for anime specifically. I do role playing, like tabletop RPGing, and so playing Dungeons and Dragons and whatnot. And then obviously we have like little figurines that you can paint and whatnot. Yes.
Yeah, that's what makes sense. Yeah, fair. I knew that part because like we've spoken about that.
Where the anime stuff is a lot more lewd, let's rather say. So I generally don't buy those kind of things. I really do enjoy the animes, but I just don't collect those kind of items.
Fair. Yeah, bro, I was like, damn. I was like, what have I walked in on?
You've walked in. No, that's what you've walked in on.
I walked in on what?
A culture shock.
Yeah, certainly a something shock. But no, it was that. So that was that. So yeah, I took Cece to a shop that she already knew existed, as if it was I was showing her as if it was the first time she's ever seen that. And then then I went to look for some LEDs. As you can see, like I said, I'll bring my. I don't know if you can see that. Okay. Some nice LED strips. So I got myself some nice LEDs to set some ambiance. You know, I had them at home, and I love LEDs. They make me happy, man. There's just something about, like, even if I switch all the lights off in here, it's like mood setter. It's just a shame that you can't change the color or the brightness. So yeah, I got some LEDs. Super happy with them. Absolutely in love with them. Now I just need to decorate. So guys, feel free to put in chat as well. Suggest something. So we've had. What have we had? We've had a skyline, so the Hong Kong skyline, a poster of that. We have had that as an idea. I'm currently trading a $100,000 live funded account, so I have considered printing out my certificate to go here. We've also had posters of the anime characters, but no, I'm not going to be putting up the posters of anime characters up on my wall for obvious reasons. What other suggestions? I think that's pretty much all the suggestions we've had. So, guys, if you have any other suggestions, like, let us know in chat, and I'll see if I can make it possible.
Nice. I just wanted to mention that we do have core PPI and core retail sales month on month a little bit later in this afternoon, as well as just PPI and retail sales for the US. So that's 3:30 or 15:30 UTC +2, so South African Standard Time, or 1:30 UK time. Just everybody, just pay attention to this. It is probably not going to be crazy, but always be prepared when trading high news, high red folder news. It can have quite a bit of impact, and yeah, you don't want to be on the wrong side of it. Do you want to share your screen, mate? And then we can have a...
I can. The one thing I will say, guys, is I have not got chat available right now. So what I have done is I've got chat on my phone now. There we go. So now that I've got chat on my phone, I can see you guys a little bit better. I'm too afraid to bring up my chat until the Wi-Fi sorted. Right now, chat is I've got 0 glitches, touch wood, so it's amazing, and I'm enjoying being able to talk to you guys and hear you, Rich, without and so I'm hearing none of that. So I will load my terminal. If it doesn't load, or if it starts freezing after loading, then I'm gonna have to bring it down again.
I honestly think it's due to the uploading from the back end that may have disrupted your Wi-Fi a little bit. I think it should be fine.
We'll have a look.
So yeah, you can bring up your screen, mate. And then do you mind like walking us through gold?
Absolutely, man. Of course, 100%.
I know you love gold. The smell of it, the taste of it.
I do love a bit of gold. The look of it, the taste of it, the smell of it, the feel of it. Right, let's go straight into gold, shall we? Right then. Oh god, I'm gonna come back. All right then, let's have a look. What are we at now? Oh, this is gold. There we go. Fantastic. So a bit of consolidation at the moment, which I kind of wanted to see a little bit of something. I thought we were going to get it at this in this move here. Let's get my arrow out. I thought we were going to see gold move from here, but we didn't. I thought we were going to break these highs. Now, we came up to higher. We came up to the all-time highs, tested. Now we had this follow-up bear candle here. Now we dribbled on back. You guys know how I look at the candlestick characteristics. You guys know that I like to see a nice big confident candle followed by a dribbly candle followed by a confident candle. And what I'm seeing here is very confident candles to the downside after testing the all-time highs, followed by a dribbly candle back up. So now that we've got a three touch and a fourth test of the all-time highs on gold, we are going to look at potentially selling it. Now, this is a very brave move, I feel, so I'm not going to rush this process. And if so, the chances of them being a low-hanging fruit or the chance of it being a minus risk to reward are highly probable if I'm to sell this. But this is on the 15-minute time frame. So what we want to see on the 15-minute time frame is minimum a break of this low here. Now, you can see already I've marked out the high and the low of the swing points that I'm going to be looking at. So this is the high, this is the low, and truth be told, I'm actually going to delete this and rearrange this to identify a new area of consolidation. There we go. So now it's just one big block consolidation. It's not high consolidation, low consolidation, mix a little bit of garbage price action. Now it's just one big consolidation. What I want to see is a break and close with a momentum in a particular direction. So what I want to see now is a break and close under here at a minimum, but ideally what I'd love to see is a break and close below this low here, because this for me is the swing point. So actually I could do this. There we go. So this for me is the swing point. Microstructure here. So if I drop down onto the 5-minute time frame, we've got this microstructure here within the all time. So we've got the high, which is the swing high, got the low, swing low. Everything in between, all the highs and lows in between is for me garbage price action, or as I like microstructure, structure on the smaller time frame that isn't necessarily as relevant to my direction I want to trade. However, it's something I do look at anyway. So we've got consolidation here, followed by a big bear candle down. If you were a scalper or a very high risk trader, you could have potentially traded gold from this level on the break and close. However, you'd be sitting a little bit in profit, I suppose, but basically break even. So what we're going to see then is wait for price to move on down, break and close below this low here. Now, I know we've got this area, but I'm not actually too interested in this area here. It's mostly this consolidation I want to see. Now, on the contrary, on the contradictory hand, we've also got the idea of buys. Now, the idea of buys are an absolute no-no unless we can break and close above all-time highs, or unless we can prove, unless gold can prove to me that it is so consolidative on the 5-minute, maybe a sweep of the lows, and then a break and close higher to show that we are going to try and continue up on that uptrend. Now, right now, it seems to be doing that quite nicely, but I'm just going to wait and see. Because
yeah, I like that. We were discussing that. Oh, goodness, what's up, Sam? Samir, how are you, my friend?
What is up? What is up?
Yo, Samir, what's good, man?
How are you guys? Let me.
You're a bit early, you know.
Yeah, today I'm early. I just got a notification that today I have to be at 5:30 my time zone. I was assuming I was gonna be at 6:30, but I was scheduled
Fair.
for 5:30.
All right.
Well, that's awesome. 3
Hello.
is the better, you know?
Sweet.
3 is a lovely number.
That's good. That's good. That's good.
Yeah. 3 is a lovely
bro,
number.
like, what an
Exactly.
amazing surprise! What an amazing surprise!
Yeah, I was just getting ready, and I was just like, "Oh, I'm on the screen."
Yeah, Remy is really fast these days. He's like, he doesn't wait for us. There you go, you're in.
Yeah, Remy's like, yeah, yes, here he is. Bosh, you're in. It's like me. Like, I was just like testing some things, and I was like putting my mic up, and then be like, right, just gonna make sure. Oh, Dirk's saying hello to me, and I'm on stream right now. And I was like, oh, thank God, I've got a top on.
All right.
Yeah,
Hello, chat. Hello. Hopefully, you guys are doing good. And did you guys took any trade today? We are almost, yeah. This is gold
I
chart.
took a NASDAQ sell, which I mentioned like just before you came onto screen. Right? So
Okay.
took a little bit of a sell just on. I have to go and just scroll down a little, or go back to the lower time frame. Now I know, Samir, you trade NASDAQ, so you'll appreciate this move. The way that I explained it was we had the day start over here. This is the 5-minute chart. We had one attempt, a slowed attempt towards that area, the high of the day so far, and then a secondary attempt during Tokyo, which then started to push price a little bit lower. We had the low of Tokyo, which was basically swept, but no follow through to try and push price higher. This price action kind of gave me the idea that if we're going to break, we're going to break volumetrically. So I doubt that there's going to be a break retest for me. I'm assuming that it's going to be a bit more of a just break and continuation. What we then had was we had this local high point over here, which was swept, and then the local low point, which got tapped over here. And then the moment it got tapped, I was like, oh, well, this thing is probably going to start pushing lower. Initially, I didn't have that box as a target point, but more Monday's last bearish candle before we had this very strong momentous upward move. So aiming for this point down here, initially, but you know me, when it comes to London session, I only trade 1-to-1s, and this was a very quick 1-to-1. I think it was a 7-minute trade, to be dead honest with you. I think it was just on the opposite side of 7 minutes. So yeah, just a very quick sell on NAS.
I think the fastest
That
trade
was
I've
really
been
a
in
nice
was
trade.
like 30 minutes.
Very
something like
quick.
that.
Very quick.
7 minutes. That's very quick, man. That's really quick. I remember I was up in London, and I placed the trade getting ready for breakfast. I think it was like pre-London Open, and as it was going into London Open, I knew that I'd be downstairs having breakfast. So I thought, right, okay, I'm just gonna jump on my laptop. And my brother was like, right, come on, let's go down and get some breakfast. I was like, yeah, sweet. Placed the trade. By the time I got down to breakfast, it hit TP. And I think that was about 13-ish minutes. I think that's the quickest TP I've hit. So 7 minutes, man. That's good going. That was really
It's
quick.
basically in and out, but those trades are scary to me. Like, I don't know about anybody else, but the majority of my trades last, let's say, 40 to 80 minutes. Not 40 to 80, 40 to 50 minutes a trade. That's on average what my trades usually do. So if I'm going to take a trade during London session on NAS, I expect it to run at least half an hour, if not more. And it's going to be a slow tick. And that's a 1-to-1. The 1-to-2s usually are 40 minutes a trade during New York session. So it's a little bit disconcerting when you have a trade entered with the expectation that it's going to take 30 to 40 minutes for it to play out. And it plays out in 7 minutes. And you're like, what is this? And then you scramble.
A week
because
ago, it happened with me.
Yeah,
I was in a trade, and in 10 seconds, I saw $500, and I just closed the trade.
Yeah.
You should take it fair.
I was short on gold. I think I was risking $1,000, and in 10 seconds, I was like 500. I'm just gonna take it. I'm just gonna wait for my withdrawal.
The very first reaction after it reached take profit was I went to go and look for news. I was like, what happened? Why?
Yeah, same.
Why
I did the same thing.
So it's like an automatic, like, what? Why? And
Yeah,
you get so ingrained with your own trading strategy, and you know your statistics about your trading strategy so well that when something is off, you immediately see it. You feel it, and you're
it's
like,
almost like a sixth sense as well. You're like, that shouldn't have happened. Like, it's quick, but not that quick. Like, something's wrong. Something's wrong there. Yeah, mate. Like,
and then it's followed up by, should I carry on trying to trade this, or should I rather just
should this become an expectation now? Like, should I? Is that normal? Is 7-minute trade okay?
Yeah. So no, that was one of those like super crazy. Just what is going on here? Why did it happen so quickly? And then Sam, have you been in any trades?
I'm looking for this the same pattern that you have drawn on gold. I like this breakout. I would take an entry here. Like, yeah, I have this similar thing.
Are you looking more for a sell or for a buy?
I want the breakout of this, and I think what can be the next target? Let me see. For that, I think one. I have to. Yeah, exactly.
I was you're talking about gold right now. There's not one.
That's what I'm mate.
You target wherever the hell you'd like. You can target the moon.
Then I'm gonna target 4,700 next. What is that? This.
Will? Didn't we just talk this morning about 4,700?
Didn't we literally say 4,700?
Yeah, it's crazy. All three of us are in agreement. We were all saying 700 doesn't seem that far fetched.
Yeah, if we zoom out, I think
we were literally all saying 4,700.
It is just 1.25%. Every day it is moving like 2%, 1%. So I think it is not that far.
Yeah, I think it's even though you're doing it quote unquote blindly because there's no structure towards the left.
Yeah, exactly.
The assumption is backed by previous data in the sense that if there is breakouts and it's going to all-time highs, it can easily move 1 to 2%, 1 to 1.5% every day. So it's not far-fetched. It's not outside the realm of possibility, let's rather say.
Yeah, it's just 1.2% from here. I think it is not that much bigger of a move. So it can get triggered
Mm.
4700. On the other side, let's take a look at other pairs, maybe Euro USD, or let's take a look at GBP USD, because many of our viewers like these major pairs, which is good. Okay.
Yes.
So yesterday we closed quite bearish, but we don't have a wick here. That's
Mm.
a problem here. So let me look at weekly candle, how the weekly candle was. Okay, we have a very kind of a bearish momentum on the weekly. So I do
Mm.
think this week we can go to the downside at least till here maybe. If not, I'm not really keen to see these kind of areas. But let's just say this can be the area where weekly can go. So if we go to the daily now, this is a structure we are dealing with, retesting this structure, going to the 4 hour, and 4 hour is a little bit choppy here. But if I draw some trend lines here and there, yeah, I definitely see this can be liquidity. And then we will see if we print new structures, because overall if you see, it is uptrend at this particular leg. I'm not really concerned about this. I like to see the previous or recent legs which price is printing. Right now we are going higher, so yeah, I can see some liquidity moves, and overall, I do think GBP USD can move to the upside, but definitely I can short it. Just a small pullback, at least to, let's find some areas which are untested. Maybe this area, because price never tapped this area. This area is really choppy. So yeah, I think this area can be the next area. But to be honest, GBP USD is not really ready yet. There is a lot of confusion where the price wants to go. So I will not touch this just for the analysis purposes. I do think we can print one more leg, and then we'll see if we see any structure to the higher side. But I think Euro USD was interesting yesterday. Me and Victor was talking over it, and I said if we break this, definitely we can go short, and we definitely have shown some momentum right from here. And that was a really good move here. After the news, we closed below. This was a really perfect entry. So yeah, this pair is good for shorts. Yesterday I broke it down. I do think we can test this area once again, and we are not really that much far from this area. It is just 25 pips. So yeah,
Hey,
definitely
man,
there.
25 pips is a good size trade.
Yeah, exactly. I think this trendline breakout is also entry signal, going for 1 to 1. That will be good. So on the other side, I do like gold breakout. Gold is very clean. Look at this clean triangle pattern. I do think if we break out, 47 is the next. I might can just leave small lots just to 4700, just to swing it, because I'm not a swing trader, but it is not bad to try new things with a smaller lot size.
I was about to say, stepping outside of your comfort zone ever so slightly.
Yeah,
That's how
exactly.
you learn.
So yeah, we learn every new things every day. So that's how I might can take small lot here just to test it. If I can swing trade, or maybe I can hold trades for 2 3 4 days. Let's see. It can hit today also, by the way, because gold is showing very huge momentum. But I am definitely looking for buys above this area, and it looks really good. And NAS 100, I don't really like to give my analysis on this pair before NYSE, but just for viewers, we are below the 200 EMA, so definitely shorting it would be good. But NYSE can also give momentum to the upside, which can cause 15 minute to close above this 200 EMA. Then my bias will shift. So we have to wait how the NYSE opens. And same
Yeah.
as 30, yeah.
As I like to say, patience pays.
Yeah, exactly. I do think we can get a long trade here on US 30, because this is one of my concept. If we are way too above, or the distance from this particular two EMAs are unusual. Like normally price moves in a wave, but if it is overextended, then I can take opportunities. I can take reversal trades also. And seems
Yeah.
like US 30 is setting up that way, and my entry signal will be 15-minute closing above this. Then I will be taking longs here. And yeah, I'll just wait for my 1-to-1. That's my plan for today. I do like longs on this one. I'll still wait for longs only. If even if we get impulse to the downside, we may can get a V-shaped recovery, and still I will be taking longs here. Yeah, let's see. It looks good. US 30 and gold, 2 pairs for today. Let's see.
Yeah, I've only been looking at NAS. I've just about had a little bit of a look on EJ as well, where EJ had like a significant slowdown this from last night into this morning, and it started to look like it wanted to start printing a bit bearishly.
Was
and
there
then
any news today
Yeah.
on this pair? Let
Say
me see if
again.
there was there any news on this pair? The way it is, wicking like this.
We had news yesterday on dollar, yeah.
Today
So
there was no news on euro or JPY. This
on
was really a good trade actually. I would have
Yeah,
executed right
it
here.
was on CPI for the US, so UJ moved, and I think it was based on the UJ move that there may have been
Oh yeah,
a similar
yeah.
reaction on EJ as well.
Yeah, it was some.
They're very correlated right now.
Yeah, exactly. This was really good trade. I'm just seeing it right now. As you mentioned, EJ, I would have executed this trade based on this demand area and EMAs to the upside. Structure is bullish. Definitely looks clean. Missed this trade, but it's okay. I have another strategy. This support and resistance. I mark it this way. So I trade 2-3 strategies. This is one of my strategy. I like to cover it someday. Let's see other pairs. If any pair is setting up, I might can give my views on it, how I'm seeing it. Okay, I'm just gonna go to every pair. But my main for today is
So on the JPY, it seems as though the Japanese opposition party CDP Komeito have begun talks with views of forming new party. So that was 3 minutes ago. Red folder news on JPY, and it seems as though that might be the
yeah.
reason why we're having this slightly stronger move on the yen. It was 3 minutes ago. So if you have a look at the yen pairs, this movement that we're seeing here at the moment, this movement here is due to that red folder news. So for everybody else, that is unexpected. You don't have to worry about it triggering a soft ban on the Fivers accounts. This is unexpected news. This will not trigger any sort of issues with your accounts.
Yeah. I do like gold breakout, and I think this JPY news are also somewhere like in relation with the gold, some kind of safe haven or something like that. I'm not really sure about it, but I think Japanese kind of news is also somewhere affecting gold. Of course, there was CPI, just waiting for a close above, and I am definitely taking this buy right here, and I'll be seeing 4,700 as my target. Let's see.
So you decided to take that trade?
Yeah, if we go above this area, as we are rejecting this area, but if we finally tries to break this area, I am definitely interested in buys. My trade will look something like this. Yeah, just keeping my stops below this area, let's say.
Awesome. I like that idea for a potential continuation, and it forms in line with generally how flags operate.
Yeah, exactly.
So it I do like it, and as an added confluence, gold has been super bullish for the longest time, and the flag is also still in the same direction as that overall bullish momentum. So pretty good. Will, you look frustrated, mate.
Are you okay, man?
Dude, my Wi-Fi's it started jibber jabbering again, and it's doing my head in, man. It's 1 minute, like it was fine for about 40 minutes, 50 minutes, but now it's back. So now every now and then it'll be absolutely perfect, but then it was like really, really bad, and it just like crashed like 3 times in a row, just straight up. I'd come back, and then about 2 seconds later, it'd crash. It'd come back and crash. And it just got to the point where it was starting to wind me up. So I was just sitting there until it stopped crashing. So it seems like it's okay now. But man, I don't. Thing is as well, I want to be looking at gold as well. Like I'm not only am I trying to stream and understand and listen to you guys, I'm actually just trying to trade as well. But it's very difficult when you cannot seem to stream because it's crashing. But as long as you guys can.
There are some technical difficulties here, guys. But anyways,
yeah.
Don't worry, mate. We'll keep the fort down while you're struggling with it.
I appreciate that.
Rubakur is saying, "Where are you from?" No, I didn't meant 5 a.m. I meant 5 p.m. I'm not the guy who wakes up at 5 a.m. I sleeps at 5 a.m.
Yeah. Sam is not that guy.
I wake up at 5 a.m. I won't dare wake up at 5 a.m. I'm not a mess.
No, I'm opposite guy. I sleeps at 5 a.m. man.
Go to bed like very late.
There's only one 5 in the day. That's 5 p.m., not 5 a.m.
Yeah, exactly.
Yeah.
Back in the days, I used to watch charts at 5 a.m. also, But now I'm like, no, I just see my charts when there's. I think
I stopped looking at charts. Literally, yeah. I think I stopped looking at charts at 5 a.m. the minute I got profitable.
Yeah.
The minute I realized that I don't need to be sitting there until 5 a.m., I think that's when I was like, yeah, screw this. I was like, I'm not looking at charts at 5 a.m. if I don't need to.
I stopped looking at the 5 a.m. chart when I realized that I was hallucinating while I was watching it. I was that tired. So you're looking at it,
yeah.
doing a movement, you're
actually, like, if you just kind of introspect or just look back, then you are not the same person when you are pressing these buttons. You are not in your senses.
It's crazy sometimes how
yeah.
like if
I'll get up for the gym
from where you started, and then the processes and how different those processes are. It's just like,
mate, literally that.
Ever even consider doing this in the first place? Like, why was I doing this?
Yeah, you look at yourself and you're like, no wonder I wasn't making money. Like, how is that possible? I did some really extreme things. I did some weird things when I was trying to gain profitability. I look back and I'm like, why did I do that? Like, why? What was going through my brain to say, well, this may be a good idea? But look, I mean, we all have to go through it. We all have to try. Like, you don't know it's a bad idea unless you've done it. Unless you've done it and then you're like, oh, that didn't work. Unless you've gone through that experience, you can't take the lesson. But yeah, like, mate, I'll get up for the gym at 5 a.m. and even then, like, I feel too tired to lift a heavy object repetitively at that time in the morning. Let alone.
Yeah.
No, like, let alone try and use your brain to successfully utilize a career option. It's just, I couldn't do it.
Yeah, and the thing is, like, 5 a.m. for us is not 5 a.m. for somebody else, as an example. It all really depends on where you are in the world, what the trading conditions are during that time. Like, for somebody that's in the US, as an example, 5 a.m. in the morning for them is peak London, So
yeah, fair. Yeah, exactly.
They wake up, there's at least like, oh wow, there's maybe some movements that or a little bit more volatility. But like 5 a.m. for me is like Tokyo winding down, and then it's just like,
yeah,
sitting
exactly.
there, you're looking at a chart, it's barely moving.
Yeah,
I don't know if I have. I don't know if I have asked you this before, you guys, but if it was not trading, in what profession you guys would be? If you was not a trader,
Professional wrestler.
Wrestler, okay. And Will? And Will, what about you?
I would have gone into close protection.
All right, that's good.
Oh,
I was joking.
I'm back. No, yeah,
I was joking with my wrestler.
No, you weren't, Rich. Don't lie. We all know that you would have definitely been a pro wrestler.
Yeah, no, I
seems like a retired wrestler who just who won a lot of matches.
Yeah, somebody who had like injury at work and is now disgruntled old ex-wrestler, you know, trying to train the new young ones coming in. No, I probably would have.
I'm sorry, Rocky Balboa. God.
I
Richard Butler Boa.
I just had my pre-workout as I was not assuming that it was a stream time. Now I'm having little tingling.
No.
I'm really hyped up.
Uh-huh.
I took a pre-workout before the stream.
Pre-workout,
frozen again.
He had his pre-workout.
Oh no, I heard you. No, I heard that. Okay.
Oh, okay. All right, good. No, just making sure.
I think that, yeah. I don't know why all I heard was pre-workout. I was like, okay. Who's having pre-workout?
Yeah, richest South African gold miner's son. So we'll never work. Lol. Yeah, that's probably true.
Can I come over there and be a gold miner's son? Well, that'd be nice.
No, dude, I think being a gold miner's son sucks.
Oh wait, is it my Wi-Fi or Sam's Wi-Fi just dropped out?
No, I think it's you, mate. Like I can see Sam, hear Sam. I can hear you, see you. I think it's yours that's a little bit wonky.
There's telltale signs that my Wi-Fi is going to drop out. There's like people start disappearing every now and then they'll come back, and I'm like, oh great, imminent frustration is pending. But it seems okay.
Here's an interesting question from Albert asking, how is it possible for some people in a contest to do 20% in a day? Wow. So, interestingly enough, when we have the Fivers contest, like the weekly one where, you know, you opt in and then there's a potential for you to try and win a 20K account, that kind of like thing, I would say that is not a true reflection of what profitable traders normally do. So that system, let's rather say that the competition is a very, very much a gamification of trading. It's the only thing they really care about is whomever makes the most amount across those people so that they can give that person an account. And only once they have the account and they start trading the account as they normally would they then see, oh, okay, this person may be a little bit more gambly, or this person may be a little bit was just trying to win, and now they're like changing their strategy, or they're changing their risk parameters to be a little bit more sensible. The thing is, when it comes to these 20% per day kind of traders, that is incredibly difficult, nigh impossible to maintain over a long period of time. So
I was going to say, I'm going to go one up, and I'm going to trigger everyone who's got that sort of ability. It's impossible. It's not doable. It's not sort of, you're not able to maintain that over a long period of time. I've never known one single trader, the most successful traders I've met and some of the worst traders I've met, and I've met a lot of traders over my time through my journey, and not one of them have been able to sustain a 20% daily growth.
Yeah, no, I'm inclined to agree. I wouldn't say it's impossible, but I would say that it's highly improbable. I have not met somebody that can do that.
You know, yeah, I like that. You know, nothing's impossible. The technicalities show that it could be possible, but it's almost impossibly possible. You know, it's very, very highly improbable.
Yeah. So Albert, when it comes to that kind of chasing to get, they're purely doing that to win an account. That's purely what it's about.
100%. Having said that,
you will see a lot of those people that that gamify it. A very, 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 very tiny amount of them, I would say, actually make it as a full-time trader, or make it past phase 2 on one of those accounts, because they think that, oh, okay, if I gamble my way to winning an account, I can gamble my way to becoming profitable, and that just doesn't work. It really just doesn't.
I mean, look, to be fair, as a strategy, if you don't want a good relationship with a prop firm, and you got to be very careful, because prop firms will see right through you and just ban you. Probably, and I'm not a prop firm, so I can't speak on it, and I don't work for the risk team. However, prop firms will look at you as a financial liability if you buy an account, gamble it, full margin it, pass it, funded, pay out, and just rinse and repeat that. Like you said, a lot of people call it prop farming.
There goes Will. Prop farming.
Prop farming was this.
Right,
I'm gonna wait for Will, but let's see. We have many questions right here. Yeah,
you're
now
back, Will. But you cut out when you said prop farming, and you cut out again.
Okay.
Sorry.
I'll make it really quick. Okay, go on.
No, go on.
Okay, I'll make it really quick. So yeah, well, they use what's called prop farming, and what they do is they use unbelievable risk, and then what they'll do then is they'll get a couple of payouts, get some massive payouts, and then they'll usually promote those payouts, say, look, this is that and the other. I've got a course if you want to get a payout like me. And then the sustainability in their profitability is through selling certain. I've dropped out again, haven't I? No. Through selling certain products and services. That's where their sustainability comes from. Their high risk management is through then prop farming. So when you meet these massive payout people, just be very careful. Or these massive daily return gain people, just be very, very careful, because the sustainability element of it isn't that great.
Yeah, it's definitely the
that's
thing.
Why I always recommend.
Yeah.
Yeah, you just mentioned a really good point.
You wanted to say, Samir?
Yeah, sorry guys.
I was just saying, he mentioned a really good point. He said, many people, having good amount of payouts, but behind the scenes, you don't really know how they got to it. Maybe they have blown, a lot of challenges, and they just passed one challenge, and now they are showing you the payout. So you really have to be careful who you are following. So, yeah.
Yeah, you'll probably find as well the amount of times it's taken them to get that massive payout. They've probably actually they've probably spent close to that in actually buying accounts and failing them. So if they've got a 20k payout, there's a good chance they probably spent 10, 12 grand just trying to get that that payout. So when you look at the net profit compared to the gross profit, it doesn't always align. That's why you've got to remember, small consistent gains will get you there, and not only that, you will develop a good relationship with the prop. The prop firm will look at you and go, yes, this guy knows how to trade. This person here understands about risk, understands about trading probabilities, understands that he is in it for the long run. Therefore, we look after him.
So, Albert, you're saying I'm trying to win an account too, but I know I can never get 20% in a day. I mean, no chance I'm at 1% today. Now, let me tell you something that I think a lot of people are probably going to either disagree with me, or they're probably going to say that's crazy. When you enter a competition with the expectancy of trying to make 20% like some of these people are, you're changing your mindset to become more of a gambler, because you're looking at winning the account as the goalpost. You're looking at winning that account as the be-all, end-all, because I too would like to win an account. However, what you should be doing by trading these competition accounts is trying to get comfortable with trading your strategy live, as if it was an evaluation account. So the idea is that instead of you trying to reach that 20% to win an account, use that opportunity and that time to have, let's not call it skin in the game, but let's say you're interacting.
I like that.
Yeah, you're interacting with the platform, and you're interacting with the exact terminals that you're going to be using when you get an account. But the most important thing is you are getting experience, and that experience hopefully if it's directed the right way, you can use to build your strategy and build your confidence, build your psychology, build your understanding of the market, and then eventually get to the point where you can confidently go and buy yourself an account and then trade that account with that confidence, with that experience. Because the guys that are doing these competitions, they only have one goal, and that is get an account. What do they do when they get the account? Exactly what we'll explained. So use it differently. Use it as a tool. Don't try and make 20%.
Yeah,
you can consistently make 1% or 0.5% or 0.25% over a certain period of time.
100%, man. 100%. Just take your time with it and understand that it's a process, it's a journey. It took me too long to realize that. Otherwise, maybe I would have been profitable years ago. Who knows? Or maybe I wouldn't have been. I don't know. I try not to look back at coulda, woulda, shoulda. However, I took way too long to understand that it's a process and it's a journey and you've got to enjoy it over actually trying to, get to somewhere. I wanted to pass an account. I wanted to get payout. I wanted to get 10K months on like a 15K account. I wanted to get 10K months on a 25K account. Then I wanted to get 10K months on a 100K account. And even now, 10K months on a 100K account, I mean, it's doable. I have done it. But it's hard. It's hard. I haven't done it 2025, and I don't think I did it in 2024 either. So it's set realistic expectations and goals for yourself. But what again, guys, every time you see me dip down here, I'm not doing weird things. I'm just trying to read the comments because, like I said, I don't want to bring it up onto my computer screen because I'm petrified the Wi-Fi is going to drop out. So I'm using data to stream the comments. First things first, was Antharajak Paksha. Bro, chill. Stop spamming for a start. We're just not going to read your message if you spam us. Second thing, Henry, 100% agree with you, mate. Process equals profit. Process is the profit, man. If you focus solely on the process and focus solely on the journey of trying to become a better version of yourself, a more profitable version of yourself, the profits will follow. And I say this to people when they're trading on a 10, 15, 20, 25, 30, 40, 50K account. You don't need to have $1 million funded account. You don't need to have a $10 million funded portfolio. You don't need these massive numbers. You need a process. You need to become the profitable trader. Profits don't earn profitable traders. Profitable traders earn profits. And I know that sounds a bit weird, but what I mean by that is you're not chasing profits. You're chasing the goal of becoming a more disciplined version of yourself. And once you've achieved that, dude, the profits come flooding in. They really do. Trust me. I experienced it firsthand. That first notification in my brain that said, wow, Will, you're a profitable trader, was when I forgot that I was actually aiming for profits. Now I will move on to the guy that I just mentioned about spamming. Bro, like I said, don't spam. I will read your comment out as well. My payout was denied without a valid reason, reluctant to give huge payouts. Dude, like I said, there's always a reason. I've never known anyone, even with not so good prop firms, and I'm not going to name any, and I'm not going to say crap prop firms because all prop firms are different, but there's definitely bad eggs in the group, in the industry. So, even with lesser quality props in the industry, they have rejected payouts for reasons. There's always been a reason. So check the T's and C's, check the rules, or just ask them why. There's not a chance, and I know this for a fact, that the fivers, if you're on about the fivers, have refused a payout without giving you a valid reason why, or without you actually breaking one of their rules. So I'm sorry, I'm not saying I don't believe you, but I don't believe you. And not only that, bro, chill, don't spam. Albert, okay, Will, thanks. Awesome stuff, good man. It's good to see. A lot of people don't do that. A lot of people will ask that sort of question and be like, how do I gain 20% months? Or how do I win an account? it's not about winning the account. Like Rich has just said, he's explained what it's about. Albert, if you go in and put in that practice, then I can promise you, you may never win an account. I'll tell you what you will win is the idea of profitability. You will become a profitable trader because you're using the accounts for what they truly are. And that is a fantastic tool into profitability.
Yeah, and then I also see that we just hit 95k subscribers. Huge thanks to everyone. Let's keep growing the community.
Bro, that's it.
95. You know what that means? That means we're 5k away from 100,000 subscribers. And I can guarantee you, everybody in chat, the 100k
Come on
celebration is going to be legendary. It's going to be massive. So
oh yeah,
eternally thankful to all of you for bringing us to 95k. Let's push it up to 100k and let's get that silver play button. Yeah.
100%. Come on, guys. Absolute legends, each and every single one of you. Please subscribe. Share it with absolutely everybody. Make sure that you smash that like button as well and get involved in chat. Come chat with us. Come ask us all sorts of questions, whether it's psychological, trading, technical, or whatever it may be. You've got an wealth of knowledge and all sorts of traders from all around the globe and with all sorts of experience and backgrounds in the industry. So please come pick up or just come have a banter with us. Make sure that you're here. Make sure that you get yourself an account. Make sure you join the Fivers community because this is the best place to be. So guys, smash that subscribe button, share the channel, and make sure you leave a like on the video. In fact, how many likes have we got? We got like 250 people watching right now, which is incredible. 142 likes. We got 25 minutes until the end, or until we leave and the next guys join our section or our segment, whatever you want to call it. Yeah. So guys, let's see if we can smash that up to 200 likes by 9 p.m. Oh, sorry, not 9 p.m. By 1 p.m., 9 p.m. wherever you're trading from in the world. So make sure 5 minutes, smash that, another 57 likes. That's easy. Come on, guys, let's do it. Have I gone again?
Mohit Kumar asking which broker's chart in TradingView matches almost with the Fivers MT5 chart. So I spoke about this, I think, earlier in the week, along with Victor. I have found with the majority of my trading, for argument's sake, if you don't mind, Remy, just bringing my chart up, and then I will, or my screen up, and then I will give an example. So when we're looking at US tech, so this is NAS 100. IC Markets feed right now is giving 25,615, so 25,615, 614. I have a Fivers high stakes account, which is currently at 25,614. So relatively very close. So bar, a little bit of a spread or so, but you can actually see 25,615 on a Fivers account versus 25,616 right now on TradingView. So this is IC Markets feed. There are some other feeds that also are very close. The ones that I use for NASDAQ as an example is IC Markets. But if you go to, for argument's sake, Euro USD, I don't actually think I have... Oh, I do. So Euro USD right now on the Fivers chart is 116.46. So if I go to this one, 116.46. So, and this one is a Awanda. So the Awanda chart on TradingView is very close to the Euro USD on the Fivers MT5 terminal. What you can do is you can just jump between the two. You get yourself a Fivers account and you go individual asset that's on the Fivers platform that you can trade, and then you go and reference it. You can start with Awanda for some of the Forex pairs, and then when you go to the indices, you can maybe try Pepperstone, or you can try IC Markets as an example, and then just do the comparison one-to-one. For me, IC Markets for US tech, for NAS, and then for the rest I use, for the Forex pairs, I use Awanda. Yourself, Samir, which data feeds do you use for TradingView?
I was using forex.com for forex and gold. Right now, FXCM, but I used to use forex.com. And for US 30 and NAS 100, I am using forex.com, and this I have added FXCM. This is just I have added just to analyze, because there is no gap ups and gap downs. So that's why this FXCM and forex.com, they works good for me. And if you ask me the price feed, I don't mind. I know there is a little bit difference on price feed if we talk about indices. I just calculate my stop loss based on point size. Let's say if I enter a buy right here, if my stop loss is 200 points, then I just add it in my MT5. I just drag it and I just add as 200 points. Maybe there might be some difference in price, right, from this chart to my MT5 chart. So I do it that way. I don't really mind about changes in price. I just see the overall look, overall chart analysis. So that's it. And if you ask me the exact price, I think forex.com on gold and other forex pair, it works good. And NAS 100 and US 30, I think you have figured it out. As you mentioned, IC market has the closest price point, but I haven't really checked it because I don't really mind it. I just
Mm.
drag and drop on the MT5. So I just use this platform for analysis and stop losses in points. Like I just have a stop loss right here. If it is saying 150 points, I just drag and drop in my MT5 this way.
Mm.
So I don't mind if there is any difference in price a little bit by maybe 10 points, 20 points. It's fine.
Yeah, so I think it's maybe the people that are more concerned with scalping intraday.
Yeah, exactly.
Them it might be a little bit more.
Let's check IC
Important
market.
to
So I'm
actually have
sorry.
data feeds that's a little bit closer.
I'm just gonna tell our viewers right now if how many points difference it is. I'm not seeing IC markets. Is there any other name for it?
Uh, no, just straight up IC markets. Hold on a second. Let's do this.
Maybe it is US Tech or something like that.
Yeah,
Let's
it's US Tech.
okay.
Yeah, US Tech IC markets.
Yeah, I found it.
Mm.
Okay, now we are on US Tech, which is of IC markets, and it is of US. It is NAS 100, and now I will check my MT5 on the of the fibers, and I will tell you the exact price feed which we are getting on NAS 100, and then we can compare it. Okay, this is NAS 100. Right now it is 25616. It is 25617. So it is just 1 point difference. I think this is the closest one, which is IC markets. I didn't knew about it, but now Rich has definitely told me about this. I'm gonna be adding this to my charts. So I'm just gonna go to all sources and I'm just gonna do to IC markets. So it is just gonna show me IC markets charts. So I like this, and I think US 30. Yeah, that's it.
Yeah, and then
So
you can just compare them. So I think that's the best thing. But like you said,
613,
you it doesn't really
614.
matter all that much.
No, there is not that much difference. Look at this 613, 613, and now 612.7. Just point
Mm.
0.5 difference or point 0.3 difference. Not doesn't really matter that much. Now I will compare this to my MT5 613, and right now it is 613.4. Yeah, it is almost same, just 1 or 2 points difference here and there. And one thing more, the MT5 charts moves little bit faster. This
Yeah.
loads maybe 1 second or 2 second. There is a delay in these charts. So if you just trade directly from MT5, you will get the fresh price feed, or you will get the closest price feed, which is going in the live market. There is a little bit delay here on trading view.
Yeah. Obviously, they have to wait for the data to be released, and then they will drag it into the trading view as well. Where the
Yeah, yeah,
the CFD brokers and whatnot, they get their data a little bit faster.
yeah, exactly.
Um,
All right, we have
there
a question.
was yeah.
NGUN. I'm sorry. I cannot even pronounce it, but big fan. Thank you so much. And please talk about gold. I have already given my outlook on gold. I'm just waiting for a breakout of this, and then definitely looking for buys. I think this can be the next stop, which is almost 1.2% away, 1.3% away from this price feed. And of course, if we break to the downside, then analysis is invalidated. I want it to break to the upside, and then it will be good. Of course, it can liquidate and still can go to the upside. Analysis is still valid, but I am not looking for shots. So unless we just straight come down and then maybe trend reversal pattern or something like that, then I might can look for shots. But right now the pattern is way too clean, just waiting for a breakout and just waiting for an entry signal, and I'll be in this trade. Let's see.
Yeah, it can be triggered by the PPI today from the US. So
Okay, we have a news today. Let me see. Okay,
we've got core
okay,
retail
7 o'clock.
sales.
Okay, 7 o'clock, my time
Yeah.
zone.
Yeah.
If we talk about exact time, which is about 45 minutes, yeah.
Yes.
In
Give it.
about 45 minutes, we have PPI, and let's see how gold does. But again, as it is news, we cannot enter trades in high stake account, which is 5 minute before and 5 minute after, if I'm not wrong, or is it 2 minutes? Okay, two
Yeah, it's
minutes.
2 minutes before and 2 minutes
So
after.
two
So
minutes
it's
before and 2 minutes after.
Yeah.
So we cannot execute the trade. If we get a breakout before the news, let's say 30 minutes before the news, then yeah, I can take a trade with a maybe 0.5% risk. And of course, my stop loss, it should be here where I've marked. I cannot, leave my stop loss open. As there is news, we can also, you know, go. We can also hit these stop loss. So we have to be mindful, and we have to take the risk which we can afford. So in my case, I'll be taking 0.5% risk as it is news. If news is, just we get to the downside and then we break to the upside, like at 15 minutes after the news, then I can put my normal risk, which is 1% or maybe 1.5.
Awesome. I just want to quickly read out this question from Dishon Okech, saying, I get Richard Butler's point on using the competition as a way of building confidence, but for some people, raising the $24 to buy a two-step 2.5K account is hard. So I understand this. I really do. There is that price to play, basically, where you have to, if you want this kind of capital, you need to prove your ability. So there is a lot of people that are going to try and get it for free. Now, the competition isn't the only way that you can potentially get a free account. The Fivers with a live stream often have giveaways, and we will most probably at some point starting with some giveaways again, probably soon. There are also days, like for argument's sake, we have specials sometimes, like for argument's sake, the $24 for the 2.5K. We had a special going on that account at the end of last year going into this year. For you could get a 2.5K account for $12. Now, that unfortunately was only until the 7th, if I can remember correctly. Or was it the 9th? But just stick around, keep watching the stream. There will be days where you can jump in to try and win an account live on stream. You can try and get a discount again. That's the one side. The other side that I want to mention about this is when it comes to trading, don't trade when it's the only thing that you're reliant on, if it's your only source of income. So what you can do is, if you have some money laying around, it can be $1 here, $1 there, that kind of like thing, then you can put that aside. Now, if you're in like very bad situation where it's probably even that dollar cannot be, used towards going for an account, I would say that in that case, you can try and do the trading competitions, and then at least yourself, you're doing it with a purpose. So, but then when you do get to the stage where you can finally get an account or win an account or start trading an account, you really need to have your mindset in place to prevent yourself from either overtrading the account because now you have an opportunity and you fear losing this opportunity, or you fear losing the account or something like that. So it's a mental struggle, especially if you are very I don't want to use the word desperate, but let's say if you're very reliant on whatever income you have, like you almost live paycheck to paycheck, that kind of like thing. So in that case, I do understand. That makes sense. But like what I was mentioning earlier was more towards the majority of people. Like there's outliers to the majority as well. So in your case, with what you're mentioning, that's 100% true. There are people that go through that as well. And then the other thing that I just wanted to mention was from Black Fox saying, bro, y'all deserve more look at the priceless value you give us here.
I saw that comment. Dude, I love this.
We really appreciate it. That's the only intention of this live stream, is to give value to everybody. This is free. The only thing that we ask as payment is for you to drop us a like and drop us a subscribe and then joining us in chat. That's all we ask for. So I'm pretty sure that everybody that is on the stage and everybody that's behind the scenes and whatnot is very appreciative of comments like that. And we want to say thank you. So thank you very much, Black Fox. We really appreciate that.
Yeah, we do love a comment like that. We can't lie. You know, we don't fish for it, but when we do get a compliment like that, it does make us feel good. It's like getting told you look good today. You know, when someone goes, "Oh, have I frozen away?" Oh no, why not?
I can hear you.
My computer's doing all sorts of things, guys. Like, oh, you can. Oh, okay. I was going to say my computer's doing all sorts of things. Like my screen's flashing in all sorts of colors. Don't hear me. Yeah. I'll let you take over for a minute because I don't know if you can hear me or
not. Hammond is saying, I can hear you. Sorry, but I asked about EU. If the price pushes lower than 1.1639, could we be visiting 1.62? Samir, what do you think with EU?
1.1690. Let me see. What kind of value is that on the chart? Okay. 1.6.
That was a little bit more in reference to your trade.
Yeah, let me just mark it. I don't know where the. I will tell you the exact 1.163.
16390.
Okay, we could see 16200, which is definitely there. Yeah, definitely. If we break this trend line and this level is below that, yeah, definitely. If this is if we break this level, we have a 62, which is somewhere around here. Yeah, I do think we can easily tap that. Why? Because look at this particular leg. It is just showing you a downtrend. I'm not saying this leg, I'm just focusing on the current leg. And definitely based on this, if we break with the momentum, we have some volume candles. And of course, there is a news also. This area can be revisited. And this is also a liquidity point, which you can use as a target. So if we break this, I definitely think we can visit this area. And of course, you cannot enter blindly, but just wait for some candles to close in your favor and then take the action. That's what I will say. Definitely, there is a good area, good breakout, good areas, and yeah. Let's see what chat has to say.
So I just want to mention this. Wasan saying about the comment saying that he doesn't need the fake funded account, at least give him the payout. If not, tell me the valid reason for payout being held and account termination. Now, if your account has been breached any way, shape, or form, you will receive an email, and that email will explain exactly why you're either having your account terminated or why a payout will be denied. Somebody's not just going to say, oh, we're not going to send you a payout and then just never talk to you again. So you would have received an email, definitely. So, in this case, ourselves here on the live stream, there isn't really much that we can do for you, my friend. What I would suggest is reach out to support with the evidence of email that you have of your account being terminated or your payout being denied, and request from them further details. That's as much as I can tell you, my friend. It's the only thing. In terms of this is a huge mark on our prop firm, it's not that much of a black mark. We have evidence of years and years and years of constantly paying out and being
10 years this year.
10 years. So what I would say is take that information, go to support, bring it to their attention. That's as much as I can say about that. Really, just go and talk to support. And Remy has also mentioned it here. Hi there. For any questions regarding account statuses or payout, please contact our support team directly. It's the best way for you to receive some sort of answer if you haven't already with the email. Adrian asking, I was automatically taken out by the MT5 app yesterday, 1 second after the news. Will this be considered against the rules? Okay, so first and foremost, you need to tell us a little bit more. Did you enter the trade during the news event? So 2 minutes before and 2 minutes after the news event. That's the first thing. Secondly, was it on a high stakes account? So the rule states that you're not allowed.
I was going to say it depends on the account.
Yeah, the rule says you're not allowed to open a new trade in that 4-minute window. So if my face is the news event 2 minutes before and 2 minutes after my face, 2 minutes before and 2 minutes after that news event, you're not allowed to open up a new trade. So that counts for market entries. It counts for stop limit orders, that kind of like stuff. It's the initiation of the trade. If you were already in a trade that, let's say, you put in earlier in the day, and it so happened that during the news event you got wicked out, don't worry, it's not a problem. That's not you breaking the rules, because the rule states you're not allowed to enter a new one. I hope that clarifies, Adrian.
Yeah, no, exactly.
You entered 10 minutes before the news.
I'm pretty sure that opens everything out.
It's fine, Adrian. You entered 10 minutes before the news on a 2.500
mistakes. Yeah, that's not a problem.
Fine, yeah, that's not a problem at all.
Yeah, absolutely. Seeing Shiv coming through as well. Shiv saying, hello, Sam, bye. I messaged you on Insta and you replied as well. Love your content. Do you remember me? Haha. Dude, that's super cool, man. Super cool that you're able to speak to. That's what I mean. So many people will look at us and be like, oh, they're streamers, they're this, they're that, they think themselves something. Because I used to think that about streamers. We're just people. We're human beings. We have Instagrams, we have lives, we have partners, we have holidays. We're no different to you guys. We're all people who love your comments. We love what you guys do with us. We love the fact that you interact with us just as much as I'm sure that you love the content that we produce. So yeah, big shout out to you, Shiv.
Yeah. Thank you, Shiv. Thank you. And yeah. And thank you for being on the stream also.
Yeah. 001 Lord. Do you have a consistency rule? No, we don't. The only thing that we want you to do is just take consistency into your own hands. Trade responsibly. Trade with a solid plan. Trade with well thought out risk. Don't over leverage your trades. Just in terms of like a hard set consistency rule, we don't have one. And then Dubakur asking, what if TP hits? Then it's taken into account. Yes, your TP. Once again, for the same scenario that we spoke about Adrian, he took a trade 10 minutes before the news. The news sent his trade to his TP. It's fine, 100%. That will count in your account as profit made, not a problem. The only time that will be a problem is if you took the trade during the news event and it then hit profit, then it will not be accounted because it's a rule break that you've taken. So that's the only time.
That's literally the only thing, guys. You know, it's entry. If you enter within that time zone, then it's a big no-no. But other than that, it's that's why I say, you know, the Fivers conditions are just uncomparable to anyone else. They're fantastic. While I got Wi-Fi and while you guys, no, yeah.
Sorry, you're breaking up, mate.
Okay,
Can you hear me?
I think I was too late. Yeah, no, I thought I maybe. I was gonna say whilst I got. Can you hear me? Okay.
Yeah, I can hear you. You were breaking up a little bit, but I can hear you now.
Hello. Hello.
Yeah, it's fine. We can hear you.
Oh, perfect. I was gonna say whilst I've got Wi-Fi, I was gonna say my goodbyes, and then the minute my Wi-Fi goes, I'll shoot off. So guys, while I got Wi-Fi, I am going to thank you. I'm not going to go just yet. I'm going to go as soon as my Wi-Fi drops out again. So guys, thank you so much for joining again on this fantastic segment with me and Richard Butler, joined by Banks with Sam. So that's super cool. Sam, Samir, big welcome to you on our segment. That's really cool to have you on. What a pleasant surprise. So guys, make sure that you smash that like button. Make sure that you subscribe to the Fivers, and we shall see you tomorrow for another session with me, Richard Butler, joined by the one and only Richard Wells for the psychology session. So make sure you join as well for that one. But guys, I'm going to love you and leave you. I can smell my partner's food cooking, and it smells like it's nearly ready. And, you know, I think that's a good time to end on while the Wi-Fi is good. So I'm going to love you and leave you before my Wi-Fi just starts going all crazy again. So guys, thank you so much. I shall see you all tomorrow.
Awesome, Will. Thank you very much for joining us. Even though you've got some technical difficulties, we really appreciate you being here, my friend.
Yeah, it's gone.
Yeah, just like that. Money Since 24 saying, can I use my driver's license to do FICA instead of my ID number? I'm not sure. I would rather go and contact support and ask them whether or not you can do your FICA with that. I remember when I had to do FICA, it was my ID number, or my ID card that I had. I don't remember using my driver's license. But do contact them and they should be able to give you a good clarification on whether or not you can do that. And then Deep Focus Hideaway saying, is there swap changes for holding positions overnight for swing traders? It depends on what you're trading, first and foremost. But in general, there are swaps. So if you're holding an FX pair, for argument's sake, Monday, Tuesday, Thursday, and Friday, there is swap charges at 1x. And then if you hold Forex over Wednesday evenings, it's a 3x swap fee. If you're doing indices and you're holding an indice over the weekend, the whole week, Monday, Tuesday, Wednesday, Thursday night, no issues. You'll still pay swaps, but it's a 1x swap. On Fridays, it's 3x swaps. So the swap fees and whatnot is not determined by us. It's determined by the brokerages and whatnot. So trading with the Fivers, you're also going to have some swap fees with accounts and with certain assets as well. But Deep Focus, if you go and you have a look at your Fivers account, you will see, if you go to the symbols page on your MetaTrader, so Control U. If you press Control U, you'll see the symbols table. If you go to the symbol that you're considering trading, so I see that my screen is up now, I'll show it to you now. So you click on View on your MetaTrader 5. You go down to this gold and black symbol over here that says Symbols, Control U. If you click on that one, you will see the Forex pairs, the indices pairs, the precious metals, the cryptos, the energies, all of the stuff that is available to you to trade on the Fivers. So if I go to, for argument's sake, a Forex pair and I'm looking at AUD CAD, if I click on the AUD CAD symbol with Australian dollar, Canadian dollar information, and I just scroll down a little bit, I can see all of the information with regards to the swaps. So here you will see the swap rates on Mondays is 1, Tuesdays is 1, Wednesdays is 3, Thursdays and Fridays is 1, and then it also tells you what the swap type is, and this is per one lot of volume. It is in points, And if I were to have a swap long, it will be minus 5.1 points per one lot size or per $100,000 currency traded. So you will see that, and you will see it for every single last indices. Go to DAX, same thing. Click on indices, click on the DAX button, scroll down. You will get swaps long 500. This is in points. Also, still the same thing in terms of volume. It's the amount of volume that you would normally trade. So in this case, contract size is 1. So 5 points for a long swap, 500 points for a short swap. So that's Monday, Tuesday, Wednesday, Thursdays. And then Fridays, holding it over weekend, is a 3x swap hold. So you will get it for everything. Crypto, same thing. Bitcoin, same idea. You have swaps of 1 straight through the week. You can hold it and you will only ever pay the swap fee, which is minus 125 for a long and minus 90 in points for a short. Well, in this case, this one is dollar. So holding it for 1 lot size overnight. If you get a long swap, it's minus $125. If it's a short swap, it's $90. So that's the best way for you to go and find that information. A nice thing, I wanted to show this. Like, we're not affiliated with earnforex.com, but earnforex.com has a position sizer, which is free to use. It's pretty good. The nice thing is that they have a swap indicator that will show you if you were to take a trade right now at the current risk percentage that you have input onto your position sizer. It will tell you exactly what is your nominal, your daily, your yearly swap rates for longs and shorts. So if I were to take a trade right now at this current risk parameter that I have right now, I will pay over the whole year. If I entered a trade right now and I held it the whole year, will pay $327.6 in swaps if it was a long swap. Bar, it's a 0.01 entry point, so position size. But also consider that this is a 5K account, so it's like 6% of the account for swap. But I would never make a one lot size trade. So the information is there, and it's pretty good. So you can use this to show you exactly when you'll be paying swap fees and how. It's pretty nice.
All right, guys, I have to go now, so I'm gonna love you and leave you. It was lovely with you guys, and definitely always sharing gems, rich. And yeah, I'll see you on Tuesday again, same time. And thank you for having me once again. And yeah.
Awesome. Thank you very much, Samir, for joining us. It was a pleasure having you on our segment. We're so used to you being with Victor's segment, so it's nice to have you in with us for a change. So have yourself a great day, mate. I'll see you next time.
Take care. Bye-bye, guys. I'll see you next week.
There we go. And then, just like that, we have one amazing live streamer being replaced by yet another amazing live streamer. Victor, how are you?
Richard, you are too kind. How is everyone doing? I'm Victor, yes, and I trade, and that's why I use that as a name. How is everyone doing? It is a great day to be a trader, isn't it, Richard? What are you doing trade-wise currently?
What am I doing trade-wise for a living?
No, I mean currently. Like,
currently.
Yes.
I'm waiting for the news. It's 30 minutes before the core retail sales, as well as core PPI, as well as the regular PPI and retail sales. So for right now, I am waiting. However, I did get a very, very quick sell on NAS. When was this? This was 12:15 my time. So almost 3 hours ago, I got a very, very, very quick NAS sell. So that's the only thing that I was in today so far. But still waiting for news to play out. After news, I might consider taking another trade, depending on whether or not my setup aligns.
I see. And you took the sell you said on NAS. What are you're still in the trade, I suppose?
No. It was a 7-minute trade.
Ah, I
I
see.
got in.
That's quick, right?
I got in.
For
It went
you, I
straight
mean.
to take profit. I got out. So it was a little disconcerting, to be dead honest with you. I'm used to my trades running 40 minutes, 45 minutes a trade. I don't generally get sub 10-minute trades. So to have a sub 10-minute trade was like, whoa, what's going on here? Something's moving. So yeah,
But
just
such a
just
pleasant
happened that
surprise, right?
yes.
um, does it make you feel that you left money on the on the table?
In hindsight, yes, but in the moment, no. In hindsight, I thought to myself, it was moving so strongly. I could have held it for a little bit more. But in the moment, all I thought was, you know what? I entered according to my strategy, and my strategy says 1-to-1 during London. So I cannot be upset about that. So, no, in the moment, no. Hindsight, looking at it now, obviously, it would have been amazing
But
holding.
yes, but did you have an indication to identify this as a different setup, a wider range, a wider TP, or did you have indications? Does your trade plan accommodate or has a like an extra section? It says in the case of certain conditions, you should let go of the normal 1-to-1 and aim for more.
In the beginning, when I started working on this specific strategy of mine, I did have multiple sections like that, where in case of this, do this. In case of this, do this. And with my back testing, I kind of started getting a little bit like confused with the way that I would mark my back testing information, because I had to do it manually. I didn't have a EA marked up that could take these trades for me and do my back testing on my behalf. So it was all manual back testing. And as I was going through the replay tool to do my back testing on TradingView, and also to go back with the MetaTrader as well, just to see if there was correlation, when I did have trades that said, if in case of A, do A, and then in case of B, do B. And the thing is, some of those A and B trades that were not exactly according to my strategy, but was like a caveat, this little bit extra, I found it difficult to determine whether or not I was seeing it in the moment, or if I was using my hindsight of that movement to kind of like dictate I should have held this, maybe I should do so in future. And then based on that results, I found out that it was just confusing me. It was making it difficult for me to be completely objective, as well as making sure that I am sticking to something that is repeatable. Like, what if I see something, I'm like, you know what, this might be a runner, and I decide to go against what I would normally do, and I would extend my take profit. Instead of me getting my expected 1-to-1 or 1-to-1.5 or 1-to-2, I'm trying to get a 1-to-5 as an example. And if it doesn't go my way, I'm going to be a little bit annoyed. I can tell you that much, because then it would have been the idea of, you know what, I had a system that works, and I'm trying to be fancy now, and it's not working. So, me personally, my personality, the way that I like to do things, I like to stick to the rules. I like to stick to my as you would call them, arbitrary rules. I like to stick to my arbitrary rules of trading, and it's worked for me so far. So I don't see a reason to go and stray against it based on information that I'm seeing in hindsight.
Yes, well, of course, the one there's a way to go about this, right? To answer the question whether or not it is your side that um, justifies these rules, or is there actual data backing them up? Right, you can do a couple of tests, applying it to fresh data. You could do forward testing, see if because if you can reproduce it in forward testing, then something might be not exactly wrong, but not exactly as you thought would be. So through testing, we can figure these things out, right? Whether or not the rules are based on anything palpable or tangible.
Yeah.
However, there not however, but they are. Did you do backtesting where you optimized, where you looked back and compared your rules without these extra, without these additions, special situation additions, um, and with, and compare the drawdown and the P&L, the net result, let's say after 3 months, 6 months, whatever. Have you done that? Because um, regardless of whether or not, well, let's first ask the question: did you do that? Like, did you have that analysis of your stats?
The only analysis that I did of my stats was between sessions, not between adjustments of the strategy during a specific time frame. So my backtested data, I had an idea, and then I formulated the strategy, and then I tried to implement it across the board. Found that it doesn't always work in certain segments, and that there was a little bit more prevalent during certain sessions, during certain times. So I then started reducing it to only focusing on one or two sections, and that's how I came to the conclusion that the 1-to-1 on a London session versus a 1-to-1.5 or a 1-to-2 during a New York session was the optimal. But in terms of like trying to optimize whether or not I should have held it for longer, or like those individual changes, I did not do that. No. So my focus was more on getting to see where the strategy fits within this landscape.
It makes a lot of sense, right? It makes a lot of sense, and I think you did the right decision, obviously, because you look for the time or the period, the sessions that it works, and that's all you need, right? You don't need to make it more complicated. One thing you could do, or anyone watching, considering these, what you could do is apply, because what you're basically doing is you're looking for the result, the performance of different profiles, right? Risk profiles or risk reward profiles, meaning, am I going for 1-to-1? Am I going for bigger ratios or not, without changing the stop loss, right? Because if you change the stop loss, then that's a completely different concept, perhaps, or even that's another trade. That's another idea behind it, because you're using different levels and whatnot. Um, so one thing one can do is, let's say you have the hunch, you have seen a couple of setups that they actually go to 1-to-3, 1-to-5, and it doesn't happen just incidentally. It happens a couple more times, like too frequent for you to ignore. One thing you could do is do the backtesting with that specific ratio, and then look back if there is a way to filter, just the same way you found out that certain periods are more conducive for, or more beneficial for your strategy. Try to find out a bit more specific for the specific ratio profile, risk reward ratio profile. When is it um, uh, profitable, right? There might, most likely there could be, no, there are periods where it is more profitable than others, and the trick is to find out when that situation is happening. For example, it could be when the volatility is expanding, right? If the volatility expanding, what you will get is trades. The market will break levels like up and down, and it will run, right? Because that's the way the market expands a lot of the times, not all the time, but a lot of the times. So if you have a way to capture or identify in advance, or as it is happening, when the market is expanding in volatility and thus ranges, um, try to see if that helps, for example, to say, okay, this is the moment where I can target 1 to 2. And all other times I go to my standard profile, which is 1 to 1, which in your case, you would say I have, all my data based on, but on specific, market conditions, it merits to expand it, because maybe it's something, a one-off thing. Maybe it's just, a memory bias, and because it's so impressive, because it's a lot of profit in comparison, you say, well, you keep thinking of it, and you say, well, there must be something here, and maybe there isn't. But if there is, if it's more consistent, more repeatable, then and there might be ways to identify it in advance and capture and expanding, amplifying your profit, basically. It's TP placement optimization, basically.
Yeah. So I know that if you have, for argument's sake, an EA, so an expert advisor, a bot that trades for you with MetaTrader, you can do optimization. You can have it, you can set the increments as an example. So you would test, let's say, a hypothetical 10 pip take profit stop loss 1 to 1, and you can have it run through exactly according to your specifications, and you can then see that data and you can say, okay, optimize, and then you can optimize it for 1 pip increments on first the take profit and then on the stop loss, and then you can see what is the theoretical best, most optimized risk to reward ratio, as well as stop loss to take profit ratio as well, like sizing for that specific asset that you're trading, which I think is really cool. But for most people,
And period.
for most people, we don't have like an EA that that is, for our specific system. So you'll have to do it manually. It's something that I haven't thought about doing it like that. I think I've always kind of like sat with the idea of, I look at what the general movement is during that time frame or during that day. So if I were to take NASDAQ for an example, in general, let's just focus on this segment over here. This was Monday. If I were to look at a segment like this in a nutshell, I'm trying to understand how does it normally run in this area. I would go and I would measure exactly the movement across that time frame as an example, and I would document that. And I would go back and see how often does it move like that, either in that time frame or to the same degree. Sometimes I try and see what was the relative movement prior to it, if that plays a role as an example. But this is purely just looking at where should I put my static stop loss versus my static take profit. And that's what I would normally do. And then that's how I came to find out what was the best for my specific strategy for that. It's a very long-winded way of just saying that I could have maybe done it a little bit more, a little bit better,
Oh, there's always, there are always ways you can spend more time on your strategy, but you gotta be efficient, right? You can't be spending weeks and months optimizing every little thing and thinking, it's gonna make a huge difference. Usually, after a certain moment, you just have to, go with it. Otherwise, you will be stuck in investigation or optimization phase for too long, which is suboptimal and likely not make a huge difference on the bottom line. With the last 30% of the optimization, last 20% perhaps, doesn't really make a huge difference. It might be a little difference, but it's roughly the same as before. Not only that, if you're trading manually, your manual delays and the discrepancies, the slippage, so to speak, because you're executing manually, might be huge, much bigger than any of these optimization results that you're pursuing. Meaning that you might be spending days, if not weeks, trying to catch that. Moving your expectancy to say from 0.5 to 0.55, or maybe zero point 0.6, but you see that on your, let's say, your execution, because it's manual, can easily bring it to zero point 0.3. So you should be working on that lower hanging fruit, which is your execution, and not continuing to optimize over and over again just to get that little push, but you're losing much bigger expectancy on the other side. So
Yeah.
it's a because we don't have, we usually I speak for all of our hosts here. We don't have a team of quants and mathematicians in the background
It's all
crunching
in
number
here.
for us. Exactly.
All
So
in.
and even if, and especially if you don't have it coded to do optimization, automated, right? So automatic automation, it can take a long time, and that time is very valuable. So you need to be aware how you invest that time as a trader. Spending the right amount system building, but a certain moment say, all right, so I got something, I can move on. I don't need to, you know, s- you know, squeeze every little edge that possible I can conceive on that concept. It's a balancing act, exactly,
Yeah.
on bias trader. That's exactly it. It's a balancing act with your system building, your execution, also, how much, for example, education, right? There's You can keep on going and learning new things over and over again, but you gotta balance it out with the other parts of being a trader, formation of a trader, and you cannot keep yourself in that theoretical part forever. Even though you have to maintain it, right? Keep your mind open to learn new things. Don't be necessarily a hermit, knowledge
Yeah.
wise.
Like, keep yourself enclosed to growth.
Yes, but it's actually, I think it's I think it's very important to be to have the skills to start with, to optimize your settings, because what if the edge, what if the results don't match the after a certain time, let's say after, I don't know, 6 months, a year, your results no longer match what you used to get, right? One way to know whether or not that system or strategy can still be traded, right? Instead of just throwing it into the bin, would be to re-optimize it and see if the optimal values have changed. And if not, then that tells you something diagnostically on the illness, so to speak, of your performance, or maybe it's shifting, right? So the optimal value of these profiles and these placements of TPSL, they likely are not fixed number into eternity, meaning
Yes.
they shift as the weather shifts, right? As other systems, they shift, the balance shifts with time. So will likely the optimal values of your system. And not being able to optimize means that you'd be stuck with one value which worked in the past, and who knows how long that would work, but will be probably suboptimal going forward,
Mm.
increasingly as time passes. So it's having the skill and having the habit to periodically double check the optimizations, and perhaps doing it manually all over again all the time might be too time consuming. So we might be looking into code, at least part of the idea, to measure a certain phenomena, like how long does this run when these conditions are present. That's just a very simple, it could be an indicator that reads the movement, and then prints it on a log file, and then you can then throw it into Excel and have some fun with it.
Mm.
And that could give you an idea without going through the whole back testing with or you can hire someone to do that as well. And then you'd be basing your adjustments through time on not only on data, not only the first time, but the adjustment through time. So meaning you'll be on the edge, on the avant-garde almost constantly.
Yeah, very much so. Victor, with that, I am going to take my leave. I am going to love and leave you. The weather here by me has decided that it now no longer wants to play that nice, simple weather. It wants to be electric. It wants to be thunderous right now. So I need to switch all of this off to make sure that this doesn't get hurt.
I see.
Victor, as always, it's always a pleasure to get like these small little moments to spend time with you on stream. I really always enjoy it thoroughly. So I hope that today's stream treats you kindly.
Thank you for that, Rich. You said you're gonna take your leave.
Yes.
Next time you would leave your leave. What do you say about that?
I will leave my leave,
Instead of
and then I will stay
yes.
with you until the end.
Okay. Thank you for being here, Rich. Take care and watch out for those electric thunderstorm. I hope you have a, well, maybe not so electrifying rest of the day.
Oh, I hope that I have the most boring rest of the day. Nothing exciting happens after this stream. I want this to be the absolute peak. Everybody in chat, thank you very much for joining us today. We do apologize for the slight technical difficulties that we had with some of the streamers on today. It is teething issues with moving into a different country, but we are working on it. If you guys haven't already, please drop us a like and really consider subscribing. We are trying our damnedest to get to 100,000 subscribers. When we reach 100,000 subscribers, who knows? We might have a very interesting, strong giveaway. But that's all going to depend on whether or not you guys are going to play along with us. For everybody else, I'll see you all tomorrow for another stream. Tomorrow it's going to be myself, Richard Wells, and Will Davies, as always. And Victor, for yourself, I hope to see you tomorrow as well. Have a great day. Cheers.
Cheers, Richard. And until the Rich sandwich, Rich Will sandwich, we'll see you again soon. Bye-bye. All right, so let's take a look. We have Fabian Daniels in the chat, Louis as always, and our regular in the chat as well, Unbiased Trader. Thank you for coming in, and everyone else. There's many of you. Maybe I'm even skipping a few. Thank you for coming in and spending some time with us. I hope you are having a blast looking at the market, because the market, I was looking at NAS because the market hasn't opened yet. But the question lies, there was a question in the chat, are we going to have is the market going to continue to go lower or not? And in my opinion, right, very quickly, without doing the complete uh, breakdown, we left today, we touched the order block, precisely. Look at that. We created that order block. Look at that top wick, touching that order block and moving away from it. Beautiful, very beautiful, very technical price action. And automatically, to me, I'm looking for the next order block to be reached, which has already been reached. On the H4, we can see that the next level is the order block right here, which has also been reached so far. So to me, without going into, not knowing what the market, we don't know what the market will do, but just looking at the supply demand given by the order blocks, we can see that we have reached an area again from the, stepping away from the supply area and then reaching the next level. So to me, that's a reason to either to take profits, and if I were to be in a trade, or be more conservative, be more, maybe take some partials, and reassess the situation before I automatically just blindly thinking it will continue. Right? So if going to the lower time frames, there isn't a lot to be said other than that the market has reacted on that H4 order block by creating another outside bar. That's all of this is before the open. So we have to wait for the open to actually see what the intention is after, right? So, but the move is very technical. Look at that lower border of that daily as it was being retested and going to the next order block from one level to the next. That's beautiful. Look at those wicks, 1, 2, 3, 4 wicks, and then going into those wicks, touching the other side from a sell to a buy area, and that's what you want to be seeing. Perfect. I like that. So let's take a look at the in the chat. Uh, David Pedrini, how are you doing? Thank you for coming in. All right. So, and Henry as well. Henry, my friend, how are you doing? Okay. So let's take a look at EU, and perhaps we can take a look at GU as well. If you have any questions, now is your moment to ask them. You have, well, we have about an hour and a half on our stream. And it's all yours to ask away all the questions. But while you're doing so, don't forget there's a little cute button with a thumb up, and it's for a reason. It's for supporting our channel, making it known to the algorithms that you're enjoying this and it's valuable to you, and is going to be valuable for others as well. So don't forget to think about the other, everyone else, and hit the like button, because that will make it easier for others to find us. And subscribe to the channel. Don't forget about that. We have the next milestone coming up, 100K subscribers, and you can help us reach that. It's in your benefit, because each time milestone we reach, we'll be giving away large numbers of accounts for free, and that's an amazing opportunity to win some free accounts. And who knows, those accounts can be put in the right set of hands, can do wonders. They can, out of something you get from free, you put in the time, put on the layer of your edges on it, and in weeks, months later, it could be producing you some decent money. And you know the better you are, much more than just decent money. All right, so that this is EU. Let's take a look at the monthly time frame, just to give the idea to the recap on the monthly for those who haven't seen the stream, or me in specific, breaking down the monthly in a long time. We are given the direction of this trend line. You can see that we have been coming we from a downtrend that has been had a false breakout on the monthly time frame, and eventually broke out and retested from the other side that trend line and moved away. That's something significant that you see this a lot. That's the confirmation of the break. You have the initial fake outs, they don't really hold, price comes back, happens more than once, and then you have the confirmation that it no longer is able to come back on this side of the trend line, but rather will use it as a support for the pushing forward. But within that downtrend, we do have a bearish structure, which is at the end of a retrace. By retrace, I mean this is the impulsive move. That is the retrace. And you can see that there is a left shoulder ahead and neckline, an expansion of the quasi right shoulder, first one, second one, and that's exactly where we are. Just to give you an idea that we are in a very interesting place, monthly wise. That means that we could, this area, the whole idea why I'm mentioning this so often is that the monthly order block, given enough indication and price action, and I'm going to give you a couple of those things that we're seeing, you could prepare yourself for the possible rejection of this level. It's already reacting on it and having a little bit of a rejection, but the actual reversal of this push into lower levels, that can be caught, given the information that I'm giving you, right? Reading price action and not anticipating and predicting and going short just because there's an area there, but combining it with current price action as the market is giving us more information, you can whether or not the probability of that move is you can read whether or not it's increasing or decreasing, right? And that's how you play the game of probability, and that's what trading is. So we have uh, we have one reaction here created that big bearish candle, another reaction that created a fresh order block on that monthly time frame. If we go to the weekly, we are currently retesting this monthly time frame right here, and so far, we had the impulsive move up and a decent retrace that didn't leave any structures on the weekly time frame. So that means to me that the weekly time frame is not giving us a structure, an order block that we can trade from. That means that either the move, the expected or the possible move that I just mentioned on the monthly, maybe it's not going to happen, and that's why it's not showing the structures, or it's not showing yet. Maybe in the future it's going to create these structures, but until then there is really not much we can do. So we can wait, we should wait, sit on our hands on that idea of that massive move down until we have actual tangible evidence that it is forming, it is developing. Otherwise we would be just trading on an idea, on an expectation, but really have very probability of actually catching it or it even materializing. Let's go to the daily. Daily is quite interesting because we have been going kind of sideways on market. You can see we have higher highs, yes, and higher lows. So that has a positive bullish undertone. But in between, we have a bullish quasi on the daily. You can, let me mark this for you guys. Actually, two quasi being, this is the bigger one, right? So it's right here. And the price keeps moving all around the place. And for this quasi, the lower, no, the entry order block is, at the extreme, at the head, basically. That is the left shoulder, the head. That's the neckline. At the head of the pattern. So it's not, it might be what the market might, could use in the future, but currently it's not very useful in the sense it's not relevant. Price is not there. It's not present. It's not a pattern that the market is currently using or giving us any indication of. There's also a bearish quasi, and the market did react of the entry order block. That gives us indication whenever the market is reacting off of these order blocks. That to me, sometimes it doesn't react off the entry order blocks, and that's clear. I like that as well, because it means we can disregard the quasi, because apparently it's not at play, it's not being the driver. Market is not observing it and reacting to it, and that's a good thing, eh, because then you don't trade it. But when you see the market react to the area as it did here and again here and have follow through movement, that tells you something about the probability of the reversal actually completing, because it's reacting on an area of high probability. And it did, even though it didn't trigger me into a trade, but it did react from the order block, that from the quasi right there. And in between, I indicated here that there is a quasi, a bigger quasi, but in between there is a smaller one, which is this move, right? This reversal also created another reversal pattern, which we talked about, you know, at length before, but let's take a look at it again. So we have a left shoulder head neckline, breaks it, and it goes to where? One of the two entry order blocks long. And the market is going from almost all the time going from one level to the next. So a lot of the times that is exactly, we saw that on NAS as well. It's to me it's the easy way to trade, right? Not predicting it breaking any structures, just going from one level to the next. And that's where we are currently. And to me, that's a reason to, the same way as with NAS, to stop, reevaluate whether or not the market has more power to it to go through it, this demand zone, or is it time that the bullish quasi start having an effect on price action, and the market might be reversing from it, right? Reversing from this area. That means some kind of a pop or an actual complete reversal and then continuation. Who knows? So we'll have to see as price action develops, which of the two will it be. But so far, we can see that the market has reacted beautifully from off of this bullish structure, which is part of that quasi, and the order block is being retested as we speak, which is this daily order block. Doesn't mean it's holy, it's sacred, it cannot be broken. Yes, right. Just market just has to indicate. You just have to read what the market is developing to understand what are the probabilities. Is it breaking? Is it holding? Is it likely to keep on holding in the future based on the structures it prints, right? Bullish structures, outside bars, in what direction, what time frame, in what sequence, and so on. So that is the demand zone, a fresh order block which sits on top of an entry order block on the daily. On the 4 hour, let's take a look. Do we have a quasi? And we do. Look at this. There is a let's take a look here. There. That's the entry order block. I'm gonna move this a little. Let me move this a little out of the way so you guys can see it. Right. So this is the area to the left that makes it interesting. However, the H4 order block or time frame also is already indicating a possible reversal. So we have the daily reacting off of a structure to the left, and we have the lower time frame, which confirms of a possible reversal. It's not, there's no confirmation in the sense that it certainly is going to reverse from here, but you have the market reacting, and it can give you the right areas to be trading off. Okay, so let's take a look at the H4. This is the quasi. Doesn't matter from where it's coming. That's the left shoulder. I know it's smaller. You could consider that as well. I don't. If actually, you have to stick with whatever definition you have for your left shoulder, because the where you put the identification of the left shoulder is what creates the neckline. The neckline is the highest point in between, right? So in my case, this would be the left shoulder giving me this neckline, and that would be the head. And we have one order block, which is right this one. Okay, so to me, if there is going to be a reversal, which we could see a pop and price going higher from this daily order block, the place to look for that reversal actually was yesterday, when we touched this at the end of London, basically, or at the beginning of New York. Hold on, got a sneeze coming up. If only we could plan this sneeze, right? I could schedule it for in the future. If only. Maybe that's something we can take a look at. To figure out how to plan these sneezes. Okay. Jokes aside, let's go back to the H4 order block. The quasi that we see here as a possible indication of the reversal actually happening and being a prolonged kind of a price action. So we have the left shoulder, the neckline, the head, and then that creates, this is the top of the structure, and it comes back to the area where you should be looking for the possible reversal is the H4 order block, right? The H4 order block, the entry order block, and that's exactly where we had the reaction, the last reaction. It comes in, and then it's not perfectly going away and creating structures right away, but it moves away nicely. It still is a bit subdued reaction, to be fair. It's not, to me, if I see this, that's not the buyers taking over. So the H4 didn't trigger for me. You can see that still, even with the reaction we had, the buyers are, to me, this is just a retrace. That's not the buyers taking over. So that might be something that indicates we might be getting into this order block for a deeper retrace, a deeper retest. We'll have to see. But the H4 did react, did have, you can see the reaction, right? That wick there, and then this little wick, this little feller here, very precisely indicating that there is a structure there. But the strength and the aggression that the market reacted isn't um, is not a trigger for me, not for my system in any case. Okay, so let's take these out because that is the failed structure from yesterday, and I'm gonna take that away as well. Not that one, this one. Okay, so let's continue. See on the lower time frames, do we see some reasons to get in on a trade? There is a H2 which sits right here. Um, that's the pattern, and this is the entry order block for that H2. Let's see if that's the best one. Let's take a look at H1. It hasn't reached it yet, and the H1 could be defining it's basically the same area because it's a little bit wider. Let's take a look at that. Let's go off of the H1. Okay, so this is the area, and that gives us the overlap, which is this area below us. Actually, the overlap is this. This is the overlap which I would be looking, not assuming that the market is going to reverse, but I would be looking for possible reversal signs of the market reversing from this level. It's a, let's see how big that how wide that level is. So it's about 11.9. That's a decent level, decent area to be trading off. And the targets, if the market reverses from there, the ultimate target on the H4 time frame would be the top of the pattern, which is this right here. Let me mark it this way. That would be the TP for the ultimate TP for the H4. But if we do get a daily level, then you can see that leaving one daily, right? We created a fresh order block, which is based on a daily order block right there from the left. If we leave this structure, right, going all the way there, as the lower time frame is could be indicating, then it's likely that the price will, if the price continues, then this would be the area to be targeting, the daily order block above that. So let's mark that as a macro target. So not intraday, but a macro target to be, from the daily and above. That would be the level to be targeting. But we need the market to actually reverse. And you can see that after, not before, obviously, but after the H4 reverses, right? So you have the quasi, and let's assume for a minute there that there will be a reversal, okay? That being the quasi, there will be a reversal. Let's assume. I don't know this. We don't know this, right? It's all probabilities, but let's assume it does happen. If it does happen and the market starts moving away, leaving the order block on the daily, right? Then this target becomes. Then you have to go to the daily time frame to see, if the daily is also forming bullish structures and telling us that the daily is also playing along. If the daily is playing along, then you are able to target the daily structure as well. So that would be something to be very interesting to think about. And we have a special trader in the background, actually not in the background, already with us. So How are you doing?
Hey, Victor, how you doing?
I'm doing great. I'm great. So, what are you looking for, Saul, in the market? You as a scalper on a given on a day like this, we have news that came out. What was it? Not too long ago, right? PPI, and there are a number of speeches coming up on FOMC members. Are you are you not are you concerned with these speeches, as there are many of them?
I haven't looked the calendar. Let me check. So the speeches were already, or are we expecting them?
Let's take a
But I,
look.
but
I
yeah,
just
but I see that they're like not high impact speeches, right?
Yes, they're
Okay.
not as they're a yellow folder, but still, would you just go off the color? Meaning, if it's not red, you're not concerned.
No, I'm not concerned. The rest of the mid impact and those tend to bring like volatility to the market, but without disrupting all the charts. So I think it's actually when you start seeing some good movements in the market in order to take advantage of those. So I'm actually happy with it.
Good, good. I
Let,
like that.
let me
I'm
share my
looking
screen.
at a possible quasi on my chart. So on another possible, it is a quasi where the market, I see that the market could have a reaction, and I want to be part of that.
Mhm.
What is it that you see on your chart through your eyes, your scalper eyes? Where is the opportunity you think for our traders today?
So I'm looking right now. It's not something I trade usually, but I've
Hmm.
seen the movement on silver today.
Okay,
It just spiked up to look at this chart.
parabolic.
Yeah, parabolic chart. It's now hitting the 90s. And I also see like increasing momentum in it. I would like to see if I do my analysis here or how to join this movement. Of course, right now it's not a great place to buy,
Hmm.
but wait a retest to a demand area to any key level, and then joining the movement to the upside, then there's good opportunity here. So um, let's try to do the. I think the bias and what I try to get always is um, the bias from the daily. So I think it's clear now. It's bullish, but now I need to find my levels and then find setups and good uh, zones to try to join the movement. So um, zooming into the daily to the hourlies, there might be something here. I want to go even to lower timeframes to check that. There might be something around these levels. There might be something here. Um, and definitely here. This one is probably the clearest one. You see from this, there's a tiny gap and then continuation, and from there we just that's the initiation of the movement that broke the resistance level, the all-time previous highs, which were
Hmm.
those. So that's a very good one, but we're already far away from that one. In case we do return, in the next days to visit this area, that's a great area to try to join the bullish movement. But for scalping process or for short-term activity, I want to refine these levels right here. So now I can go to let's say the 5-minute chart, and I want to refine these levels. And then and I can see, the 5-minute chart, we can see we had like a nice push to the upside, so that would be a good trading level. Let me go back to see what we find. This one on the hour list was very it looked like very wide. When zooming into the 5-minute charts, it's not as clear. You can see here back here the volatility. um, I see very you don't see strong candles to the upside. So actually, it would be a level
Hmm.
that I would not participate in. If I continue going back, this is a level I actually do like. This one right here, you can see um, the movement where it exploded to the upside. It was already revisited, but still there might be something worth checking if we come back to that one. And of course, this is the one we marked that we said this would be probably the best one. We had the little gap, the push to the upside, and the runaway. So those are my levels now, better marked. So my next trading area is now here at this level. So I would need to wait for pullback towards this level, and if it comes back, then I would try to join the bullish moment, the bullish ride. So that's for silver. This same analysis then I do on other charts. Let's go to my bread and butter, which is Euro USD. Has been a very quiet days, not super exciting days, very rangy. Let's zoom into the hourlies to see what we got. So we have this nice push to the upside last time, and then we're kind of flagging. You see the this is like a compression, and it's a hard one to trade. Let's see if we can get some more detail on the 5-minute charts. Yeah, we have those levels, and those levels. Zooming out, we have one, and we have another one there. Let me see on the bottom side. Yeah, that's a good one. So I'm kind of neutral here on Euro USD. These patterns are not my favorite ones, but if you see your stock like in a range or something like that, there's always some opportunity of just going, trading the reversion to the mean, right? If you get like Bollinger Bands or stuff like that, this is the market scenario where these kind of indicators of strategy tend to work when you just keeping within the range. My challenge here is at any given point, this can just break, and we have the range we've been trading around, and without expecting it, it just breaks. So you find yourself like trading the range, making money within the range, and then it breaks. And now once it breaks, then like the next stopping point, let's say to the downside, okay, if it breaks the range to the downside, the next area, which is the demand area right here, which is actually a nice one to trade around, is okay, not super far. It's 15 points away. So it's just 15 pips again away. Something just to take into account. Let me see if there's enough room to make money. 6 pips. Yeah, I think we can. Let's see. Let's have something prepared. I don't think this is shown on there, but I'm just bringing my.
Yeah, we can't see the pop-ups window. Probably that's what you have open, right?
Yeah, I opened just the depth of market to have my place executed quicker. So let's see if we find some. I'll just take one, and then as it goes higher, I will see if we can have a movement to the. I might add a little bit around this level, around that level, and I'll see what happens after this level, because after that there's no much. The next stopping area is right here. So after that level, everything breaks down, and I don't want to be involved in any trade above that level. So my stops will be above there. Okay, now I add. By the way, this I changed the configuration of this account to be a netting account, so don't. Wow, that's what I didn't want to see.
Right, the market being very impulsive to the upside, going against your position. That's an uncomfortable position, Saul.
Yeah.
And it's keep on going. It looks like almost like a news event happened, but I don't think we have any schedule. Let me double check. I don't see anything on my screen. Do we? I don't think we have. It's
No,
let
I
me
think
check.
just normal volatility. So
Okay.
I had my first position. I added 2 more here, and then I added a couple more here at my last level. Just happened very, very,
Mm-hmm.
very quickly. And then let's see what I'll keep reading price action. Everything I'll need to take the full loss up here. That's where my stop
Mm-hmm.
losses are. But I'll now manage myself. But if you see, I'm at least in my decent entry point. I'm at this resistance, so my entry level is there,
Yes.
my break-even level is there. So I just want to see if I manage to have some pullback right now. I wasn't expecting that candle, certainly, but as long as we can have some up and down movement, I think I'll be fine. And if not, then I'll
Mark.
just need to take the loss.
Yeah, which is part of the game. That's part of the business as well. Taking losses, making keeping them manageable. Right, we're not always right. So learning how to lose is actually essential for winning.
Absolutely. I mean, I haven't lost. I'm still comfortable with the position. I want to see. I'm at my soft losses area, because this
Mm-hmm.
can easily go all the way to the top. So
Yes.
reading price action, I might decide to cut some of the position out for a partial loss. But it's not my hard stop area. That would be all the way up here. Just yeah. So I keep reading
Yeah,
price.
we're nearing the upper border of a daily order block. So if the market is going to reverse, I would assume that the market, the upper border at, let me double check here. The upper border sits at 1657.4. So to me, not wanting to obscure your trading process, to
Mhm.
me that level will give me some idea whether or not the market is going to hold, reverse back into the range, or this is something else. This is maybe a breakout. So that level we are, how many pips away? We're about 4 pips away from that level. The level is about 4 pips above us.
Yep.
So that would be the one of the indication to me, whether I should be less aggressive, conservative, taking losses perhaps, or just sitting, peacefully waiting for the market to come back to me.
Yep. Let's see. I keep seeing price action. I see the tails. So there's some selling pressure for sure. As I get into the break even, I can take out some of the position if I'm not feeling super
Mm-hmm.
comfortable. Let's say, I don't know, I take 1, 2. So I'm down. I'm just reducing size. But let's see the continuation of this candle. Let's see if we can if we can um, have some bear activity now.
Don't forget, everyone who's enjoying this as I am watching, Saul, who has over a decade and a half of experience trading the markets, not only being the CEO of our prop firm. If you're enjoying this, don't forget, let us know that you are enjoying it by hitting that like button. Subscribe if you're not a subscriber, because that will help us bring good content to more people, more traders just like you.
Absolutely. Um, Yeah, I think we're like. I think we're fine. Let's see. Yeah, I mean, it's a challenging price action. Price action is kind of compressing, but let's see. I'm not worried yet. Let's call it that way.
What is the reason you changed to netting? Is it better for managing as a scalper, having a netting account where you can close everything at once, or see the break even level?
Break-even level, yeah. That's the key point.
Okay.
When you see me trading like the way I trade like offline, I place a lot of trades, and sometimes like finding where you break even and then managing the multiple trades gets challenging. But only having a netting account allows you to know exactly when are you break even, and then the management of the whole position it's easier. So yeah, reason.
Nice.
Yeah.
All right. Now is the moment of viewers, lovely viewers out there. If you have a question to Saul on the way he trades, on trading in general, how he looks the market, how he approaches this, now is the moment. You have what is it, about 50 minutes, 49 minutes to put in your question in the chat. And by the way, Shamir Ali, you are spamming the chat. You are risking being banned or at least timed out for some time. So please make sure you control that fat finger.
Let's see. Yeah, as long as we keep seeing this some tails and some selling activity, I think we're fine. We don't need a lot. We just need some bearish movement, and we'll be back.
Now
Back,
your
back
TP
to
is what,
business.
5? Your TP is now 5.4 on the whole position. That's based on the charts, right? Not on the number of pips.
This is based chart. Like my break even area is here, and I want my I do see this support, so I want my take profit to be at the support, and I don't want, let's say, to place it here and then expecting the market to break the support area. Wait, let me change that. I don't want the market to have to break that support area just to give me my my TP. So I try to place them based on market structure. Let's see. We're heading there again. The bullish activity is not looking great. Let me see if something changed. Again, we're still at the compression channel. We haven't broke down. So I think there's good chance yet still for this to pop and reverse. So I'll hold it a little longer. This is, I believe, this is the order block you were mentioning earlier.
We are right there at that upper border of the daily order block, which is it can be seen as a resistant line, meaning if once it starts breaking above it, it usually has a little pop, but it will also keep the price. So we're right there. I think it's just a pip higher, that level that I'm mentioning.
Yeah.
So to me too, this is still within the range basically for market to move without breaking any structures.
Yeah, I think we're aligned. Let's see if we can get the reaction. I had, at my initial trade, I had 10 lots. Then when I was in profit, bit about take profit, I took out 2 of them. So that allowed me to now reallocate those at a better entry, at a better price. So that's the way I manage like the whole position. So now
I see.
I need to be minded that we have these levels. So once we reach those, I'm at break even right now. So, but what if we get to these levels, I might have again like bullish activity. So this is a good area also to alleviate some of the lot size. So I take 2 out. Now let's see if we can, if we have a strong reaction to the downside, and then we can ride it, trade all the way to these levels down there.
Nice.
Let's see. No, I'm not out of the woods there. I'm not out of the woods yet, but at least I had a strong. There was a decent reaction. So let's see if we can get some continuation.
We have someone giving us a comment here that I'm not aware of this. So according to Mera Punjabi animation or Punjab animation says, today's a big event. U.S. Supreme Accounting giving decision on Trump tariffs. That's why the market behaving like this. Yes, I have no information on that, but that sounds very plausible. That could be indeed why the market is, having a bit of a. Actually, let me go back and see. Yeah, I see the compression you mean, Saul, and to me, it's I can't say when, but to me this is not yet the moment where the market flips for a long. So meaning I still think there's downside to the market on the hourlies, not necessarily here on your chart on the 5 minute chart, but on the hourlies I don't see the buyer stepping in as they should, to be convincing us that was the turn, now we're going up, and etc. So meaning I'm still kind of waiting for a lower level to be reached on the hourlies, meaning I would be I am also short on my trade. I have a trade on which is a little bit underwater, but I'm still also short.
Yeah, let's see if we can have some zooming out at this movement to the upside. It wasn't like this impulse to the upside. It has been like up, pull back, up, sideways, so pull back, up. Now it's pulling back. So it's going like it's pushing up, but at least without so much conviction. So the next leg lower, if it comes, we'll try to capitalize. If we can get out around that area.
So this is the 10th year of the Fiverr. So this is a great year to be looking back, and the Fiverr's being one of the pioneers of the business. It's no wonder we are seen as one of the best, in my mind, the best prop firm out there. I'm sure the background, a lot of things on the stove boiling to be released, to be given to the public. Of course, we're not at liberty to do that yet. But can you know, give us a little taste, give us a little hint? Can you tease us a little bit
I
about what's
can.
to come this year?
I surely can. So yeah, the company will turn 10 in February. So we have a lot of surprises. Soon there will be like a official page in the website for the 10th year, and then you will see all the surprises prepared for the whole year.
Wow.
It's going to be a big celebration. There's going to be some new programs and new offerings and events, and yeah, it's going to be a fun year and a successful one. So yeah, just I'm looking forward for all of that. I know the whole team is doing a great effort to bring to put everything together and all the organization, and soon you will have more details about everything.
Wow, I'm very excited for that. So 10 years in the business, turning on February coming. It's what a ride it has been for this industry, right? We have grown like mushroom, from a non-existent industry to something where we're an established industry right now, even though the legislation and the regulation isn't completely in place.
Yeah.
But that's how it goes, right? With new industries, the regulation comes in later.
Yeah.
What a journey to be part of the beginning of an industry like we did.
Absolutely. I think we've seen a lot of the evolution of the industry, like from a small one and unknown industry and unknown companies, and trying to create awareness of the company and our offers, to something at least more known, but yet unstable.
Hmm.
And yeah, eventually, when I see the trends, um, I see, seeing companies like the prediction markets industry now blooming and all of that. I think regulation will, to our niche industry, it will take even longer, because I think there's a lot to be regulated about, around the crypto sphere,
Hmm.
and now the prediction markets, companies and sports betting and all of that. But yeah, but I'm anticipating regulation will eventually come to the industry, and will be able to at least to set some standards across the industry
Hmm.
for practices and services and all of that. But I think, over the years we've seen a lot of evolving and a lot of maturing and a lot of challenges as well. Um, and yeah, we're prepared to whatever is coming next. So, and looking forward to it. So yeah.
We have someone in the chat talking about of 8 minutes delay of price on the MT5 price. I'm not too sure what you mean, my friend. Please check support. We are. I know we have the CEO with us today, but none of us are support agents. Please check support. As far as I know, there is no delay. There is a delay, however, in the price you see on the screen on the chart, but that delay is not the trading, the terminal being delayed. What it is YouTube. Actually, there's a delay between what we see, Soul and I, while we are talking, and the time that you guys see it. Even though it says live, it's not. You're not. There is a delay, but it's not 8 minutes. I think it's like 20
No.
seconds, 30 seconds delay between when I say something and when you guys hear and see us saying it.
Yeah, it's only the latency of the live stream. But if you experience its challenges with the feed on your platform, it's always a good idea to go to a different server. Here at the bottom right, you can change server and maybe pick one that is closer to your location or has better reception on your area. But as far as I'm concerned, there's no delay on the price on the platform. So try doing that.
Yeah, I'm watching mine as well. There is the market is at all not on my side, not visible. So my friend, please consult uh, the um, the ping distance, what it says on the lower right corner, and or check with live agents on our website. We
Um,
have a we have a question,
mm,
or maybe you want to look at the charts to see how. Um, we have a question here. What strategy would you recommend to one trying to change to a different one, meaning someone who is changing strategy? What sort of confirmation should one look for? Have taking losses this year, all of them. So this person is Dishon Oketch is Okay, so there's two questions there, like how to, you know, what new strategy basically you're asking when the current one is failing. What new strategy? So you're asking what strategy should we recommend? And the other question is information. What can we say to this viewer, Dishon?
I think I'll let you answer that, Victor.
Perfect. Well, Dishon, as we're watching Saul focusing on the scalping on the chart, what I can tell you is, my friend, it's not so much on any specific strategy. What you need to learn is learn to read the market. Learn, in my opinion, learn price action. And then, for example, you can watch us, more often if you're not already doing so. And you'll see that I use simple and a small number of concept order blocks and quasis, right? That's just an example. You don't have to use the same examples. You can use trend lines, you can use indicators, it doesn't matter. But um, uh, use something simple, something that is repeatable, and try to see if you can read the market with that and build a strategy around it. Meaning, if you see order blocks are being retested and they are good places to get in for the follow through movement, then that could be the basis of your strategy. And it's not too specific on any given strategy that will make you profitable. It's all everything around it. Meaning having a good strategy, yes, but also the risk, also the mental side of things. So I would, consider those things. And about confirmation, price action. Price action is the best confirmation in my mind. Meaning you use the same concepts or other concepts, but where price is actually printing the candles, printing the patterns, telling you, giving you that confirmation whether or not the setup is ready to be used or not. Thank you for the question, by the way. We have another question by Unbiased Trader, a regular in our stream, also on Discord, uh, who is asking, I would like leverage on indices and BTC improves for Bitcoin, for not Bitcoin, Bootcamp. All right, so it's actually a request. Okay, all right. So thank you for the request,
But
Unbiased
yeah,
Trader.
just to mention on that, we did increase recently the leverage on the bootcamp program. It used to be 1 to 10, and now it's 1 to 30. So it's similar to now to the one step program, which is 1 to 30 as well. So I think now there's more room to work with all assets in the bootcamp program, especially when um, the bootcamp offers like relatively large accounts. So that's been launched in the past days. So you can trade with larger leverage.
Yes, that is from the beginning of this month. Actually, so all assets, not only the forex, but also BTC and indices on the bootcamp, all assets have a bigger the account itself has a bigger leverage to it. So that's actually, maybe we already answered that request, perhaps. In addition, thank you, no problem. Thank you for that. Yes, there is an EA that we talk about on our stream very often, and it's for a reason. It's called the PSC, the Position Size Calculator. You can find it on the website earnforex.com. I'm not affiliated with that website. It's a free tool. And you can go there. It's a great tool. There's many things there as well. But about the PSC, I know, and that is a great addition to your toolbox. It will help you with your position size and issues, and minimizing human error, which is something you should be looking for. Unbiased trader, no problem, my friend. Thank you. Thank you for that. All right. So what is the read on EU? We had a reaction of that level that we talked about around 58 and some. Um, and that is slightly above the upper border of the daily order block that I mentioned. Is the market giving you, that reaction give you more confidence?
I'm just managing size right now. I was up at I believe 20 lots or 18 lots. So as I had, as my as the trade came back to break even, I reduced some of the size. That way, if the market has another impulse to the upside, I can reallocate that and bring my break even level higher to a very entry point. I'm reading price action. I see the tails on the upside. So I see the bearish pressure, yet I'm waiting for that strong candle to the downside, or strong, the confirmed movement to the downside. I haven't seen that. Reading price action feels okay. I'm waiting for that confirmed movement to the downside. I was anticipated this to be like a choppy day, and so I'm not going to expect a lot from the market. Right now we're at break even. I only need like three pips in my favor, 3-4 pips. That would be it. So not a lot to ask from the market. But you can see considerably. I think my first entry was down here, somewhere down here, and
Yes.
through the technique of adding in, I brought my entry level, my entry price up to there. So now my entry level is now at a much better price, much better position. So I'm now better positioned for the next movement that I'm anticipating to be to the downside. So that's the idea behind the scaling in technique, to start small and adding in different valid entry points. So you are the best positioned you can be when the pattern or the movement happens or comes. And you see how you don't see like the the, the the tool I have here, but it's just to scale in and out from the position to manage size accordingly, so I can add when needed and not be oversized at any given point. So if you've been follow, I've been playing around with my lot size, and I'll keep doing that.
Yes.
In anticipation for the movement to the downside.
On the yes, on the 5 minute, I can see some nice price action. My order blocks being created. There is a right on the level, right, the upper border of that daily order block. The market created a pin bar, which left an order block, and that's where we retested just now and are moving back away from it. So it's a nice possible indication of what's to come next.
Yeah.
I saw you were quite active in massaging your position, so to speak.
Yeah.
And you did it quite nicely, because basically you lift the entry point all the way to current levels. I assume this is something you do. This is normal business for you. I mean, this is something you do all the time, right?
Yeah, absolutely. This is the way I trade. This. I'm not sure if I was just trading, this would be a pattern or a trade I would be trading. Of course, we want to trade on during the training room, but this is not the. For me, it's not the perfect pattern I'm looking when I'm trading. Right, I look for clean in price action, less choppiness, less tails, more directional movements. But it's just for demonstration purposes, let's call it that way. I think we're doing a good job. Now, if I was wait, let me manage this a little bit. I want to there's the good thing is, if the moment to the downside comes, it will have some strength behind it. But every time it goes back to these levels, there's like a bullish reaction. But you can see you can see the bearish pressure, you can see it's there. I just want the final can downside, but I still feel for the market context we're trading, I would like to reduce my lot size a little bit, if I can, and then to leave the rest
Mhm.
of the position to go for my TP, which would be around that area. Let's see if we can make that.
You were mentioning the tool, the depth of market tool.
Yeah.
That's the
Mhm.
Alt B on the terminal. So it's the native tool. That's not something external that you're using. It's just
Correct.
the Alt B. So you can enter and increase and decrease your size quickly.
Correct. Yeah, that's the whole purpose. So I have my predefined lot size, my predefined TP. So every time I place a trade, the TP is already there and everything's in place.
And the TP is applied on the whole position on because it's a netting.
Yeah, on the netting account, it messes up a little bit. It works better on a hedging account,
Mhm.
but on the netting account, it messes up a little bit. It's not a great one, but at least when I only have one position, I need to have it. I mean, I can recalculate my TP every time, so
Mhm.
I'm fine with it, like not having it. But at least
I
for
see.
entry and exit and having the lot size in there, it's fine.
Yeah.
Okay, let's see if we can have some follow through. I mean, I managed to reduce lot size. To be honest, it's super frustrating price action. It looked like a very strong bearish candle, and ended up closing as a week, and which is also something to take into account. And we discussed this in the past. There's like
Mhm.
confidence level on your trade.
Yes.
And price action and the market gives you constant signals of okay, this is going as expected or different to what you expected. So that's also information I use to, okay, will I keep adding into this position, or do I want to just mitigate the exposure, or reduce the loss or something like that. So again, coming back to the price action we're handling today, which is not an easy one.
Mhm.
The fact that we had the breakout, that was kind of the movement we wanted to happen, but it closed uh, as a pin bar, as a reversal candle. Then I need to
Mhm.
be ready for the next movement to be like a movement to the upside. So okay, I tell myself, okay, let's reduce lot size again, because if this goes up, I will have to have, I want to have like lot size available to reallocate it higher. So that's why you see me like managing the trade. I think everything I've been doing, I've been just in order to be like uh, break even. I don't think I'll go now and check the P&L of the trade. But I think I've
Mhm.
done a lot of work just to be slightly positive, or not even that, or break even. Which is fine, because again, it's not the easiest price action, not the clearest one. So also exercising fixing trades and breaking even, it's also a good thing.
Basically, you're playing the defense, right?
Yeah.
You're
Let's see. I hope back here at this candle, I was hoping to be like more offense, and then I had the price action, the bullish price action. So I'm just cautious with what I'm doing. A good thing to do. Sometimes I hide my trade levels, and I ask myself, okay, would I like to be like buying or selling at this point? If I would just open up the
Mhm.
chart, where's price right now? Is at the resistance level or close to the high of the range? I would like to be shorting. So it's okay. Then that confirms that I'm not, in the at least in the wrong direction. Now it's a matter of managing it.
How do you? What's the? Is there a shortcut to hide the level,
Sorry, come again.
or is there a shortcut? Because we don't see, of course, there's a pop up menu opening, but is there? I was just wondering, is there a shortcut to hiding the level, or is it done with clicking on the mouse?
Yeah, so you do right click. You don't see the pop. So you do right click, and then you go to trade levels. There's like a long list, and then you go to trade levels, and from there you
We
can
finally are getting some. Excuse me. Go ahead.
Yeah, then you can hide your level, and then you know come fresh and unbiased to the analysis of the trade. So
we're finally seeing
we see the bearish candle.
Yes.
I want to see closing down confirmation. I don't want to see the bullish tails. I'm just filling out the trade. I don't think I'm making any profit now. Let's see. Once I close the whole trade, I can see like the P&L for the trade. We'll see how we did. I think we're slightly in the money or break even, but nothing fancy. You see, I was expecting this candle to close. Yeah, the opposite of that candle, just to have like some continuation or something. But at least I'm downsized. I'm back to 5 lots. So now if we have another impulse to the upside, now I have ammunition, right, to use.
Yes. What is do you have like a number? How many lots? Do you keep track of that mentally? How many lots? What size you can? What's still safe? What is too much? How do you know? How to gauge, is this a little or a lot of size?
Yeah, of course, this is a large account, relatively large account. So, these accounts, I'm comfortable even around the 50, 60 lots. So I wasn't even close to that. But when I'm multitasking and explaining and streaming and all of that, then I want to trade smaller, so I don't get engaged on the P&L and the trade. Let's see.
Yes.
Okay, we had the bullish candle. I'm downsized. So again, now if we continue to the upside, I can reallocate that amount up here to bring my entry level even higher, and then on the next impulse to the downside, then I'll be able to even take profit down here, already for profit. So I want to read price action around these levels and to see if I can add, build again to 10 or 15, and then I'll be able to take profit around those levels.
The same way you do the defensive play, meaning you try to minimize the size whenever it gets back to break even. You add when it goes up. Do you do that as well on the opposite side, meaning getting aggressive whenever you see the market confirming and it retraces? Do you add to the position and then take a little bit off as it pushes up? And do you do that as well in the opposite direction when it's not defensive but offensive?
Yeah, absolutely. Because those are the times when you have your your A plus setup. You want to be offense, because you don't have those setups super often. So you want to make sure you capitalize on those when they present themselves. So yeah, that's for sure.
Beautiful. I like that. I like that a lot. All right. So the market is still choppy, still within that daily order block, kind of difficult to trade. Not really, moving at least as I would have expected, which is going lower to reach into some demand area below. Because to the left there isn't anything on the, let's say on the hourlies to the left, there isn't anything for the price to break or to reach.
Yep.
But it's not happening, and these days, these moments, we need to be able to be satisfied with a result that may not be as expected, right?
Yeah, silver. I don't want to go away from the open trade I have already, but silver is right now at the level we marked that we could be taking the long trade. So we'll see how this reacts. I expect from here, we're coming from also a strong movement. But yeah, something like this. But I'll go back to my euro just to keep managing it. But if I close it up, this is where I would be looking to, to be active now. Silver, maybe doing for some confirmation, and then taking the long here.
All right, everyone who is watching, don't forget we have the CEO with us today. So this is your chance to ask questions, trading related questions. How does he read the market? What he thinks about perhaps a certain pattern, or who knows, risks, how he manages risk. Now is the moment to ask those questions. And while you're thinking of these questions, don't forget to hit the like button. Be kind to the subscription button as well. We do appreciate it if you decide to subscribe.
Okay, we're right at the resistance. I add a couple more. We'll see if we can have. I now see this like a fresh demand. So I'm now not super convinced we're going to break that level. So if we can manage to retest that area, that will be my TP target. So now, as I added, my break-even level came higher. Let's see if we can revisit that demand area. I'll be targeting that level. If it breaks, I mean, there's a lot of. I'll see if it breaks to the upside. I need to be careful of the break, because on one hand, we do have like lines of defense. We have these levels marked that might act as fake out levels, but just to watch closely for this not to become like breakaway market. So let's see if we can. I'll just keep watching price action. Okay, I'm happy we held. Let's see if we can have like some retest to the downside.
Concentration, focus is high, laser focus on the trade. This is Scalping with Saul. We have a question. I'm gonna say it slowly since we are focusing on the chart. But someone in the chat is asking about the frequency of traders scaling up 5 or more times at the fivers, meaning scaling their account up 5 or more. How often does that happen?
I see from the data, I see a lot of, hundreds of, I don't know if hundreds, but yeah, many traders with small accounts scaling up multiple times. I don't see that as often on large accounts. So I guess the emotional is are also present there. But I do see a lot of small accounts, 5K, 10K, 20Ks, like scaling multiple times. I don't see a lot of 100K accounts scaling up multiple times. But it does happen, all the time.
So the frequency is high, but usually lower size accounts that they reach multiple scales and also 5 and higher. And is there a pattern in the scaling frequency when we compare bootcamp to high stakes to hyper growth? Is there one that scales more often? Is there any pattern in comparing the programs?
I think I see the bootcamp accounts more consistent. The fact that they have relatively low leverage, they keep their accounts for longer time. Usually the passing rate or the losing rate of the high stakes tend to be faster or shorter, just because of the nature of the program and the high leverage available. But yeah, let's see if we can get the
Yes.
reaction. We're seeing some bearish activity. Now I'm not asking a lot. I just need the market to come revisit the support area here. So let's see if we can have that, and that would be a great closing for the session. Let's see. Okay, I like the candle. I like the closing. Let's see if we can have a follow through.
That's a nice close indeed.
Yeah.
Short, lower wick, relatively large body, and continuation as we see here. Nice. We have a question by Loana Darrow. My apologies. Who is talking about uh, risk, at least in her experience, managing risk as a scalper gives her a lot of opportunity to mold the position, go in with 10 different position. She breaks down her position in many a large number of position, meaning it has multiple ways to mitigate risk and reevaluate things. What do you say about this? Do you think do you see this at the Fivers, so that scalpers are more aware and better risk managers than non-scalpers?
I wouldn't say that as a whole. I do relate to what has been mentioning here. Traders who trade like more like multiple assets, they have
Hmm.
like the portfolio a bit more balanced. They're not super dependent on only the price action of one single asset. So they're like more hedged in some way. In terms of risk management, I wouldn't say has direct relationship. I see great risk managers swinging and great risk management uh, scalping. So yeah, I wouldn't. Um, wait, I'm just concentrated on the trade. I wouldn't say I
Yes.
wouldn't say the scalpers are better risk managers, but certainly the traders who trade multiple assets, they can they have more balanced accounts.
Yeah, that makes sense, right? You have one, the correlations coming into play and offsetting the swings. So that makes a lot of sense. So the market is, it seems, almost at the brink of turning around and coming back into the range. Maybe perhaps going to the range middle point, or maybe who knows to much lower level. But we're not there yet. We are still making on, at least on the 1 minute, making higher highs and higher lows. So we still haven't broken that swing point. Actually, that swing point is already your TP. So it doesn't have to be much. You're already at break even, and you'd be out of the trade before it actually starts breaking any structures.
Yeah, but this has been the story of the day. Like we're almost there and it reverses, almost there and it reverses. Has been a challenge. I'm more used to entering and very easily getting to the target, less this amount of tails. But anyways, let's see if we can have one little push to down to this area down here, and that's it. But at least again, I'm managing the size
Hmm.
um, to not being overexposed at any given point. I'm also now we're getting to the end of the session, so I would like to to close the to end the session. I mean, I can't believe we're not managing to be even like 3 pips in profit. Let's see, one last push. I don't wanna hold into another impulse upside, so I might just call it. Let's see, closing. Yeah, there we go.
Is there any? Yeah, the market is showing weaknesses. Let's see how it closes. There, that was the close.
Yeah, and then the bullish. I'm again back to 4. Yeah, so that's the game, right? If it goes up, I reallocate. I take a peel out a little bit to whenever that moment's come.
Is there any pattern in the days of the week you trade? Any specific day you say, I, for whatever reason, I just don't trade that day?
No, I don't care about the day of the week. I do care about the setup, the pattern. So we saw from the beginning, on the hourlies, when this compression is it's challenging to trade compressions. So I was kind of expecting this, but I'm always, I think there's been a good demonstration of size management at least. But yeah, I think I don't know, I'll leave it open. Just seeing it as a compression. If this, compressions to the upside tend to eventually break down, to the downside. They meet a strong supply or something, and they react strongly to the downside. So, but I don't know when is that going to happen. And since we're here and we want to also, respect the time of the streaming and meetings I have later on. So I might just cancel it or leave it open with losses and take profits, and then to see what happens. Because it's very hard to time the market. But I think the position is fine. The position is good. We'll see once we close it. We'll review P&L. If I can close this for break even, I think we'll be slightly on the greens. Otherwise, slightly on the reds. So nothing major, nothing concerning. Both sides.
That's what we want to do. At least if if the market doesn't behave like we expect, at least it's something manageable to recover the next day, or something either positive or negative, but something that we can live with.
Yeah, every time would be like 3 pips, like -3 pips or -4 pips. We haven't been crazy losses. The silver call, that's the reaction from the demand area we marked. This might target, let me see what's on the one. Yeah, this might target these levels first, these tails, and if not, all the way to the supply area over there, and then from there, if it breaks and continue or reverses. But that's you can see the reaction of the demand area.
Yes, it's a clear reactive price action.
Okay, we'll give it.
We'll
give it 1 more minute, and I'll just need to close. I'll need to close. Let's see. I haven't managed to be more like 2 pips in profits. Crazy.
It's a nice display of defensive play, I think, Saul, because the market has been, even though I expected price to continue to push lower, the market has been pushing against you for the whole stream.
Yeah.
And you've managed to, keep it manageable, keeping it manageable, adding, subtracting, taking off when it hits a little bit into profit or break even, and then adding it back at a better level. I think that's a very helpful and educational display of defensive play. Very very nice. I like that. You gotta be, it's not always pushing, right? Just like in sports, you gotta know when to push forward and when to hold a stand, because you're being pushed against. So and that's what we saw today.
Absolutely. Let's see if we can have one last push. Let's see. 5-minute chart's looking. 5 minutes looking good. Hourly is looking good. There we go.
This is the last minute. Things are getting exciting. The last minute, basically, of the stream, the market is finally pushing beyond and in the direction we were expecting. Kind of making us wait until the last minute to give us what we want. There we go. That's the push.
But not even not even 1 pip. Let's see. I don't think we did. I don't think we did great. Let's see. That's the trade. So that's the commission we made. So we made $173. Not great, but
can we what's the can we see the pip? Because with the the amount, there's also the volume. Is there a way to see what the net pip was on the whole position, or is that it's not displayed on the net accounts?
I see once you close the trade, it doesn't give you the pip. It gives you, but I've been trading, full lots, and I did 27 lots overall.
All right, so
I did 270 dollars profit. So that was like what was it, like 10?
That's a 1 pip. I think that's a 1 pip net, minus 1 pip net result, including commission.
Yeah.
That's basically break even.
Yeah, break even. Because I open one. Yeah, absolutely. And then I paid all the commissions, and that brought me down to $163 profit. So I'm happy with the result. It was a challenging session, but at least
it was.
We didn't lose money. So
yeah, it was a very
fixing trade is also a good thing.
It is. If I were in your position, it'd be a little bit uncomfortable to me, because the market keep pushing me back, and you need to keep massaging and moving your break even. For those who are wondering about the calculation that I just made, one full lot, 1 pip is $10 move. One full lot is $10 move. So if you have 27 lot, that would be 27 times 10. That's 270. So that basically this trade, even though it's you made profit and it's a one pip profit, isn't a little bit above break even. But there you go. That's the calculation behind it.
Yeah, absolutely. That's it.
And yes, we have come to the end of our stream. I would like to thank everyone who have been watching and sharing all those great comments and questions in our chat. I'd like to invite you to come back again to our stream tomorrow. Hit the like button and help us in our journey reaching 100,000 subscribers, because it'll be great. And stay tuned for the big surprises, as Saul has mentioned, that we will be having in February. So mark your calendar for February. We will be turning, the Fivers will be turning 10 years, the pioneers of the prop firm industry. And you don't want to miss any of that. Any last word, Saul, before we say sayonara?
No, nothing. Always happy to join. To grab shoulders with the with the traders and the community. Yeah, we'll see you next time. Thank you, Victor. Thank you, guys.
Thank you, Saul, for your display of fine defensive play and awesome. Thank you very much, Saul, and everyone have a wonderful, wonderful rest of the day. Goodbye.
Bye, guys.